if we're going to deliver on our really ambitious targets that we talked about earlier, we need governments to speed up, we need automakers to speed up, because ultimately, if we don't do it together, we're not going to be able to deliver on our ambitious targets.
All right, well, we look forward to getting an update on those ambitious targets. Uber's Global Head of Sustainability, Thibaut Simphal, we thank you so much for joining the program. In the meantime, a quick couple of headlines that are crossing the Bloomberg terminal. This around Egypt. It looks like the Egyptian pound is slumping 10% after making a pretty big central banking announcement here. Guy, Anna, this is the one that we've been watching a lot on the currency devaluation front, especially when we know that Egypt, from their budget standpoint, has been talking a lot about food inflation, how it's hitting not only the breadbasket of the world, but Egypt specifically, not to mention the influx of refugees from the region.
Yeah, and just moments before we saw this decision to allow the market to determine the exchange rate, the central bank raised rates at an unscheduled meeting and made this announcement. So watching the Egyptian pound on the move this morning.
Yep, 600 basis points, I think, to 27.25%. So we think about interest rates and what they're doing here. That puts it into maybe a little bit of context. It's interesting that this is up until now, there's been effectively two rates. You've had the kind of the official rates and the significantly less official rates. OK, let's turn back to what is happening here in London for the rest of the day. Jeremy Hunt will deliver his UK spring budget a little later on. How will the Chancellor balance the books and the demands, the political demands from his party? We'll have more on that next. This is Bloomberg.
Looking at your portfolio of businesses, it is about resilience, it's about pressure, it's about women. Like,
yes.
How does that come together how does it manifest in the deals that you're doing now?
Yeah, it's one of the things that I became increasingly passionate about after I retired, was acknowledging the fact that focus and this performance mindset was a huge asset that I had gained and that I had worked on and perfected for over 20 years. And now working through brands and founders, I just recently announced a collaboration with the Amman Hotel Group where I bring in the best talents in sports recovery and performance mindset in retreats and offering it there to their clientele. Our first one is actually in Phuket in February. So working through what that means, I mean, if you see the stats of Fortune 500 female CEOs, 80% of those women have played sport competitively through their life journey. And all those skill sets that they've built, to me, they were part of this first chapter, right? But how do they now apply to everything else I'm doing? And I'm so curious and interested in how I can bring that to the audience now and make it more mainstream and accessible.
From all indications, Jeremy Hunt remains very concerned about that issue around the gilt market and not wanting to repeat what happened in 2022. So, where there are tax cuts, there will offsetting measures to pay for them. Because unfortunately for him, unlike the autumn statement, the Office for Budget Responsibility isn't going to come along and say, good news, we've revised revenues up by £60 billion. It looks very much like that's not going to happen this time.
That was Elizabeth Martins from HSBC and what to expect from the UK budget. A big focus then on tax cuts, how they're paid for, what this means for the UK government's need to borrow and how it borrows over what time horizon. Let's get more on this story. The UK spring budget, of course, due later today, just after midday. Bloomberg's Lizzie Burden is in Westminster for us. Lizzie.
China's securities regulator head saying that he will promote delistings of some companies.
Treasury Select Committee Harriet Baldwin, who'll be scrutinising the Chancellor's every move. Harriet, is it responsible to be cutting taxes when we're still at 4% inflation?
Well, I do think that the budget today has got to be seen through that lens of the progress that's been made on inflation. So it's down from 11.1% at its peak down to 4%, and it's on track to get to 2%. So I think it does need to be evaluated to make sure it's not inflationary. And we'll have the Chancellor in front of our committee next week, and we can drill down into that question. So the second thing I think is, as you know, the tax takes at a very high level in the UK at the moment. That's because on the back of the 400 billion that was spent during the pandemic supporting households and businesses, and then of course the extra help of 94 billion that was given after Putin's evil invasion of Ukraine, you know, that has meant that there's been more public spending than anticipated. So you've got a high tax take, but I think what you'll hear today is the Chancellor take steps to reduce that further on top of the 2% that he cut in national insurance back in November. That came into effect on January the 6th. I think it's plausible that he'll do another 2% today.
But the Bank of England doesn't think it's responsible to cut rates yet, so why is it responsible to cut taxes?
Well, I think in terms of the national insurance cut, it does have different characteristics than a straight across the board flat rate cut in terms of other taxes. The reason it is less inflationary, and the Office for Budget Responsibility scored it as not being inflationary, is because it actually tackles one of the challenges of the UK economy, which is it attracts more people into work. So the Office for Budget Responsibility said that it would do that. It would help the supply side and the growth potential of the UK economy as well.
Yeah, on that point, in the evidence you've heard at the Treasury Select Committee, is the economic inactivity problem more attributable to financial incentives, or is it to do with ill health? Because if it's the latter, why not just spend more money on the NHS?
Well, I think it is really important to spend money on the NHS and to spend money on helping people back into work. There's been an enormous programme that's been delivered by the Department of Work and Pensions to try and do just that. And it is making progress, and it needs to make more progress. I do think it's also really important to recognise that spending on our health service is at a record high. In fact, in real terms, it's 40% higher than it was in 2010. But what you're seeing in terms of the NHS is it's not quite back to the output levels that it was delivering before the pandemic. So I think there's some work to do there in terms of helping some productivity gains. And I do think we'll hear from the Chancellor today more in terms of public sector productivity.
OK, I also want to ask you about the fiscal rules, because there's been such a debate about them, whether they're tying the government's hands or actually too loose and it's all the work of fiscal fiction. What do you reckon?
Well, we'll have the Office for Budget Responsibility in front of us next Tuesday to ask about this latest round of forecasts. And what I would start by saying is that all forecasts are by definition always going to be wrong. But having an Office for Budget Responsibility that was set up in 2011 has actually proved to be, I think, if I paraphrase Winston Churchill, he said democracy is a terrible system, but it's better than all the other systems that have been tried. I would say the Office for Budget Responsibility has its drawbacks, but it's better than all the other approaches that have been tried, which were the Treasury doing its own forecasts, so marking its own homework. And the alternative that we saw with Kwasi Kwarteng's budget is that you deliver a budget with no Office for Budget Responsibility forecast, and that wasn't a good idea either. So I think the guardrails of the Office for Budget Responsibility do help the Chancellor, and I think that they will enable the markets to feel very confident about the progress the UK economy is making.
But as you say, its work is imperfect. Is it worth your committee asking for a Ben Bernanke style review of the OBR like he's doing with the Bank of England?
Yeah, well, we're really keen to see the Bernanke review that we asked for, and we were told we were going to see it in February. Now we're being told that we're going to see it in the quote-unquote spring, which is a kind of elastic concept. We look forward to seeing that. I think it's a really important piece of work, and it's great that he's doing it for the Bank of England. In terms of the Office for Budget Responsibility's forecast, they do a lot of self-assessment. So they've gone back and they've looked at the things they've got right, the things they've got wrong, and the reasons that things weren't correct. So it's actually, I think, pretty transparent, and they are prepared, unlike the IMF, to come in front of our committee and give evidence in public about the rationale behind their forecasts. I think it's particularly interesting to me at the moment that the Bank of England themselves have much more pessimistic forecasts about the UK economy than the Office for Budget Responsibility does. And actually the UK economy has outperformed all the pessimistic forecasts that we had this time last year. So it's not growing as fast as anyone would like, but it's certainly growing better than the forecasts were this time last year.
Indeed, and the UK is in technical recession. Just finally, how much headroom would you say the Chancellor needs to leave himself today to be fiscally credible? Is he allowed to leave a wafer-thin margin?
Well, I think what he will want to see is he will want to see that debt falling, and that's really important to show that debt falling in the fifth year of the forecast, which is the fiscal rule that he's set himself. So I'm very confident that he will show that. I think that in terms of inflation, he's got to make sure that the measures he takes aren't going to make inflation any worse. So I think the 5 pence off the price of fuel at the pump, that's really helpful because that's been extended for another year. It's
been temporary since 2011.
It's been temporary since 2011, I know.
That's fiscal fiction, isn't it?
We've said a lot about that on our committee, but we were expecting him to extend that. We didn't think it would be temporary, and we've been right on that. So I think that's going to help. It's going to keep inflation under control, and it's going to matter a lot to people filling up their cars.
Harriet Baldwin, Chair of the Treasury Select Committee. Great to have you back on Bloomberg. Back to you, Anna.
Thanks very much, Harriet Baldwin there with Lizzie Burden live in Westminster. Thank you for that conversation. For viewers in the UK, join us later for special coverage of the spring budget. That begins at 12:15 UK time. The Chancellor's speech is scheduled to start at 12:30, of course. Later today, we'll be hearing from the Chancellor once again. Bloomberg getting the chance, in fact, Lizzie Burden getting the chance to put questions to him. The Chancellor of the Exchequer speaking to us. Don't miss that conversation this evening here on Bloomberg TV. We're watching a lot of things today. We'll put up the list of what we're watching from Powell to the UK budget. Let's bring in Christine Aquino, who joins us now and can help us think about what is ahead for us today. And let's start with the UK budget then, Christine, because that is one of the things we're watching. We've had a number of views. Watch the DMO. Watch what they say is required in terms of debt issuance to go alongside this budget. Watch whether he's got a wafer-thin level of headroom, to use Lizzie's terminology from that last conversation. What are you going to be watching for?
Well, Anna, I mean, I'm always going to be watching the gilt market, and all the factors are relevant to that. So definitely the gilt issuance is going to be my primary concern here. And, you know, the expectation is that that issuance is going to increase this year, £258 billion expected, which is an increase from last year. What's interesting, though, is also the expectation for the mix of issuance. I think a lot of market participants thinking that the DMO is going to move towards shorter dated bonds, which makes a lot of sense if we're thinking that the Bank of England is still on a path to rate cuts. Now, this all potentially becomes a little bit more, goes a little bit more haywire if, in fact, the budget is a bit more inflationary than expected and therefore limiting the Bank of England's ability to cut rates.
You talked about the gilt market, an 11 basis point move in yesterday's session off what the expectation around this budget might actually look like. Why is it not showing up in cable here? Why are we seeing rate volatility in cable at monthly lows, but bond volatility spiking higher?
Well, I think, you know, because the budget is ultimately a fiscal event and that will have very direct implications for the gilt market, I think the pound is subject to more global factors, shall we say. That's also a factor of what's happening in the U.S. dollar and, you know, some implications for U.S. policy there. And then, of course, the comparative experience of the Fed and the Bank of England in terms of the rate outlook.
Who's going to move gilts more today, Jay Powell or Jeremy Hunt?
Well, I think Jeremy Hunt will get a first stab at moving gilts, but we might see see a little bit of pushback depending on what Powell says today, of course. Though, I mean, it's going to be interesting, though, right? Because the message, again, that's expected from Powell is more of that gradualism, more of that pushback against any expectation of earlier cuts. He's managed to browbeat the market so far into finally aligning with what the guidance is from the dot plot, 75 basis points of rate cuts. Just a little bit over that for market expectations, but mostly aligned with the Fed.
We'll see whether the dots change. Dots can change. Maybe we'll get that. Will be the next thing we're going to be watching out. We've got the beige book as well. Kashkari speaking later.
Jolts you referenced ahead of the jobs report on Friday.
Absolutely. It's a busy day. It's going to get more exciting as the day progresses. It's been a great start, but it's going to get more exciting as the day progresses.
This has been exciting enough.
Precisely. This is all you need to get your day going. But the day's going to progress, and then we'll do it all again tomorrow. Christine, nice to see you. Nice to see you over here as well. Christine Aquino from our Markets Today blog. You can get more from the team on the front page of the Bloomberg UK website. You can also type in TLIV Go on the terminal as well. So that kind of wraps things up for today. But we've got some really big events coming up. Is Powell the main event today? Probably. We'll see. But I think kind of the rest of the week, I'm still building up to that payrolls number on Friday.
I don't know. I kind of want to know what happens after this UK budget because I think it has implications for how the rest of the bond market trades. That does it for Markets Today. The Pulse is up next. This is Bloomberg.
Noting here that Fitch affirms Korea at AA-, outlook stable.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
This is Bloomberg News Now. News when you want it at the touch of a button. Another volatile day on Wall Street. We're seeing big moves. All eyes on Capitol Hill as Democrats and Republicans. Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts. Bloomberg News Now. Context changes everything. Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that.
Don't miss Bloomberg's interview with the
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. The UK Chancellor Jeremy Hunt is said to put personal tax cuts at the center of his spring budget as a general election looms. We're live in Westminster. Donald Trump and Joe Biden dominate on Super Tuesday with a rematch of the 2020 presidential election, now looking more likely than ever. Plus, markets eye 2 days of testimony from Jay Powell on Capitol Hill. The Fed chair is likely to signal there's no hurry to cut rates. So first thing is first, let's take a look at the European markets map. Frankly, a lot of things going on moving these markets. One of the signals that we're looking out for the most is also the rally in gold and Bitcoin, which are basically giving conflicting messages about the strength and risk assets in the economy. Now, if you look at stocks, but also a lot of the bonds, they're actually posting some pretty small moves. The one thing we're watching out for is that testimony from Jay Powell. And then here in the UK, watch out for any movement in sterling and, of course, gilts on the back of the Chancellor giving that budget. So it's a big day for politics on both sides of the Atlantic. We'll bring you the latest on Trump and Biden's Super Tuesday sweep with Kriti Gupta in a moment. But let's start here in the UK with Lizzie Burden. As we build up to the budget, the Chancellor expected to give workers a 2 percentage point national insurance tax cut when he delivers his spring budget this lunchtime. Now, Jeremy Hunt under pressure to present a pre-election giveaway, but will also need to raise other taxes or cut spending to do so. So, Lizzie, what are we expecting from the Chancellor? What's his rabbit out of the hat moment?
Well, as you say, Francine, this is one of Jeremy Hunt's last chances to woo the electorate before the general election. So it's going to be a distinctly political budget. We're hearing that the expectation is he'll cut national insurance again, as he did in the autumn statement. You can hear them calling for a general election here in Westminster. But if he cuts national insurance, on the one hand, the thought is that it will be cheaper than income tax, it'll be less inflationary, and it will also help to incentivise people back into work because it only applies to people who are in jobs. However, if you give consumers back £10 billion, it's hard to imagine that it won't be at least to some degree inflationary and mean that the Bank of England at least has to keep rates higher for longer, if not hike again. That seems a bit unlikely. How is he going to pay for it? One measure could be that he ends the non-DOMS loophole, which currently means 70,000 people don't have to pay tax on their overseas earnings. That would have the added benefit of stealing one of Labour's ideas. And the big question really today is, will the bond vigilantes come for Jeremy Hunt like they did for Liz Truss? The reality is, as long as he does the dance with the Office for Budget Responsibility and lets them mark his homework, it looks like the markets could be pretty quiet. But let's see if he does anything egregious today, Francine.
Yeah, and let's see if anybody out there loses their voice at Westminster. There's some, pretty enthralled singing behind you, Lizzie Burden, there in Westminster. Now, we'll speak to you in a short while. President Joe Biden, Donald Trump have also swept the Super Tuesday state primaries. Meanwhile, the former president's remaining rival, Nikki Haley, scored her second win, this time in the state of Vermont. Well, let's bring in Bloomberg's Kriti Gupta. Kriti, when you look at, this election, it feels like Americans aren't really enthralled by it, certainly not enthused by it. And it looks like we're going to see a rematch despite so many billionaires giving money to Nikki Haley.
Yeah, Fran, no protesters in here, but I'm sure there's plenty on the other side of the Atlantic. Look, this is a really kind of tricky question when we're talking about financing in particular, and that's where Nikki Haley really matters here, where she has been out front in terms of getting a lot of backing, not just from grassroots conservatives, but from major Wall Street donors as well, who think that neither President Trump or President Biden are the right fit. But I think that's the exact point of it, that if she does end up dropping, the fact that there is this kind of neither is the right fit mentality across America is really where you're starting to see the polarization, especially as it applies to right here in Europe and what the policy actually looks like. And that's the campaign rhetoric that we're expecting to kind of amp up from President Trump, who, believe it or not, has actually had a fairly reserved approach relative to his last campaign, especially when it comes to things like tariffs around what that might actually look like for Europe. In addition to China, he's already mentioned that 60%. On the Biden side, it's a different story. He's using more of the carrot mentality than the stick mentality through kind of his Inflation Reduction Act, for example, EV incentives, really trying to bring production domestic, similar to President Trump, but doing it in a very different way that is still angering some of his colleagues across the Atlantic.
Kriti, thanks so much. Kriti Gupta there with a thorough look at the elections. Now, to talk markets and how all of this plays into markets, of course, and treasuries, we're joined by Michael Straubek, Chief Investment Officer at Lombard ODA. Michael, so good to have you back and in the studio in person to talk about all of the good or bad things happening in the markets. I mean, you still believe in U.S. exceptionalism, but we worry about deficits, we worry about the cost of money, and we worry about the U.S. actually just having too much on their hands. How do you play this still U.S. exceptionalism in the markets?
By betting on the U.S.
Which is doing great.
Which is doing great. And its exceptionalism has paid off very handsomely in markets. I mean, the U.S. is leading the charts on growth, on earnings, on tech.
Productivity,
on growth. Doesn't seem as if much has gone wrong for the Americans, but it's more fundamental than that. U.S. assets are sort of a strong core in today's global economy. Look at Europe, quite in sort of a perilous state, also because of the geopolitical uncertainty. China has materially slowed down, and the U.S. has held up the global economy coming out of two geopolitical shocks, the pandemic and now the war. And is showing little sign of weakness. It's actually showing sign of strength as we sit here.
So what does this tell you? I mean, I guess the question is it everything priced to perfection, right? Is valuations, especially in the U.S., because of all the good news that you lay out, at peak?
Well, it's certainly not cheap, but I don't think in this market valuation plays a lot of role in investors' thoughts. I think it's more about safety. I think it's more about quality. I think it's more about sort of sustainability of earnings. There's a lot of stuff out there that is very cheap, but it just keeps getting cheaper. At some point, maybe as rates start to go down, we'll see a broadening of the rally. But for now, it's really about focusing on the winning business models. That is tech, that is global firms, monopolies that sit on enormous pools of profits, and that's very much in the U.S.
But Michael, overall, and I want to talk a little bit more about the U.S., given that we have the testimony of Jay Powell, and also given that we have a big election year. But overall, the markets, you have a record high for Bitcoin. You have gold moving in the other direction. It seems to be a little bit jarring in how the markets look at risky assets.
Yes, that's quite sort of a conundrum to think about. But Bitcoin obviously is still this speculative element that we have here. We still have a system that is full of liquidity and where people are chasing returns. Gold is quite a different story, and I think of it still as somewhat of a hedge for large investors. Maybe right now people are piling into gold to stock up in as a physical asset. I think that's what's keeping it quite high. But on average, real rates, in our view, seem to have peaked and will be under pressure to go down a bit. That's normally good for gold.
So, Michael, in the U.S., what do you buy? I don't know whether it's fixed income or actually equities. Again, we have Jay Powell speaking today and tomorrow. But then you also have this U.S. election, and it's unclear. I know we're now focusing maybe more on policies, but it's unclear what a Trump in the White House would do for the Inflation Reduction Act and regulation.
So, number one, tech is unavoidable. We like communications sector services. We like stables in the U.S. and also, to some extent, energy stocks. Trump will probably be good for that. Treasuries, absolutely. I mean, we are in an environment of very materially higher interest rates, short and long ones, than we have been used to for the last 10 years. And that is an opportunity. It's not a threat. Especially if, as maybe Mr. Powell may suggest today, that they are still on track. I think he will be quite sort of tempered, and I don't think he's going to be seen as pivoting again in some kind of direction.
What, in terms of being more aggressive with cuts? I mean, there was always this mismatch between the market's expectations in terms of the pace and actually what central banks, wanted to do.
Yeah, look, I think the rally that we've seen since October was really sparked by a pivot. It was sparked by the fact rates have peaked, they're coming down, inflation or disinflation is here to stay. I think they need to be very, very careful at this final stage of the battle against inflation, not move too fast, not get ahead of themselves, but balancing very carefully what the labor markets are doing.
It's like Goldilocks. It has to be just right. On the UK, Michael, are you excited? I mean, this is a very important budget for the Tories because we have an election looming.
Yes.
Does it matter to the markets?
I don't think so. To me, from what I'm reading, it looks like a smaller type deal. It can be undone by whoever wins the next election, and I don't think it matters a whole lot.
Michael, thank you so much. Michael Schrobeck, their Chief Investment Officer at Lombard Odier, of course, staying with us, and we'll talk a little bit about China next. Coming up, could the UK Chancellor be about to borrow policies from the opposition party to fund tax cuts? We'll get reaction from the shadow Chief Secretary to the Treasury next, and this is Bloomberg.
In tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Next time on The Deal.
I realized a long time ago that being a football player or an athlete, you can get into a room, but once you get in the room, you have to prove that you belong there. But what keeps you in the room, right? It's your talent. It's the talent that a lot of people don't see or don't think you have because they've only seen you in one way. And for me, the biggest pivot was getting out of my own way, telling myself that I'm more than just a football player.
At a very high level in the UK at the moment. That's because on the back of the 400 billion that was spent during the pandemic supporting households and businesses, and then of course the extra help of 94 billion that was given after Putin's evil invasion of Ukraine, that has meant that there's been more public spending than anticipated. So you've got a high tax take, but I think what you'll hear today is the Chancellor take steps to reduce that further on top of the 2% that he cut in national insurance back in November. That came into effect on January the 6th. I think it's plausible that he'll do another 2% today.
Harriet Baldwin, their chair of the UK's Commons Treasury Committee, speaking to Bloomberg ahead of today's budget. Now, let's stick with this story. Jeremy Hunt expected to announce a 2 percentage point cut in national insurance. There's speculation that he may borrow some of opposition Labour policies to fund it. Well, our UK correspondent Lizzie Burden joins us live from Westminster with a guest. Lizzie, over to you.
Thanks, Francine. Well, I'm joined by Labour's Darren Jones. He's Shadow Chief Secretary to the Treasury. Darren, do lower taxes mean higher growth?
Well, first of all, we in the Labour Party have said for some time that the tax burden should come down on working people, irrespective of the growth assessment, because they're higher than they have been since the Second World War. But we've also got to get the economy back onto a trajectory of growth in order for those to be sustainably funded. Now, this will be the 22nd budget from the Conservatives since they came into office in 2010. And every single time, the Tories have said they're going to grow the economy. And where are we right now? We're in the middle of a recession. That's why growth is going to be at the centre of Labour's policies coming into the general election.
But everybody wants growth, so let's be absolutely clear. If the Tories cut national insurance again today, if, as we understand, they cut income tax down the line, and are you going to maintain those pledges?
So we support taxes coming down on working people. That's why we supported them in November. Let's see what the Chancellor sets out today. Now, it's right to say that if people have got a few extra quid in their pocket that they might spend, that might stimulate some economic growth. But the fact of the matter is that when people look at their tax bill, their mortgage mortgage or their rent, the cost of their bills, and how much money they've got spare at the end of each month, even with the announcements that we expect to see in the budget today, we think that people will still be worse off and the cost of living will still be a real problem for people. So the idea that that will flow through to growing the economy when it's really just helping people kind of pay the bills, I think is probably unlikely.
Indeed, but the bond market's question to Labour is how you balance the books, right? If you maintain their tax pledges, how you continue your pledges on public spending. You've already had to scale back the £28 billion pledge on the green economy. So if you match what the Tories are doing, will you have to scale back your plans even further?
Well, look, we will inherit what we inherit if we win the election this year. We're very clear that if we do win the election, it'll be the worst fiscal inheritance that any party has had since the Second World War. That's the scale of the challenge. We can't really do anything about that from opposition. It's the Tories who are responsible for that damage.
Well, you can change your own plans.
And we can start to turn things around. Our manifesto and our policies will all be fully funded and fully costed in line with Rachel Reeves's fiscal rules, which is that we will not be borrowing for day-to-day spending and we will get debt falling as the size of the economy.
But are you confident that the market will believe you can be both tax cutters and public spenders?
Well, you've got to get the balance right. One of the big questions, of course, is reform. I mean, if you look at what we're spending money on, our public services, they're in enormous need for modernisation, for reform, for efficiency savings, both to try to get the public sector budget under control, but also to improve outcomes for people across the country. So we will invest when it's prudent and responsible to do so, but reform is going to be a huge part of our agenda for public services in order to get that balance right.
Okay, it's a pretty bleak picture that you've just painted us of the UK economy, but actually lots of CEOs that Bloomberg's been talking to are actually now pretty bullish on Britain. Our economists say that we could be top of the league table of the G7 when it comes to economic growth if people keep spending their savings. Are you just talking down the economy?
No, I'm just reflecting the facts that we see in the OBR forecasts, in the economic assessment of the country. That's not to deny that we still have huge assets, huge strengths as a country, huge opportunities for the future. But we know that when we speak to investors and businesses, for example, that they can't invest or pay for the things they want to because of other policy blockers, whether it's planning reform or the energy system or the labour market or the apprenticeship levy. There's a whole package of policies there that a government ought to be taking seriously to stimulate investment and growth. And for reasons I don't really understand, the Tories are failing to do that.
And when you're having your smoked salmon and scrambled eggs offensive wooing the city, what is it that you're promising them that you think they like?
Well, we think there are three things that we're saying to the private sector that Labour will bring. One is stability, the second is investment, and the third is reform.
Policies?
Well, the policies that flow under those themes. So stability is really important because, of course, I can't remember how many chancellors we've had now and how many times they've said tax rates are going to go up and go down. It keeps moving around because of the chaos in the Conservative Party. You will not get that from the Labour Party.
But we want specifics.
And our 5 missions, which are to grow the economy, to fix the National Health Service, to tackle crime and antisocial behaviour, to decarbonise the power sector by 2030 and to reform education and skills, will be the driving policies that will underpin that stability alongside our package of investment with the private sector and reform.
Okay, Darren Jones, Shadow Chief Secretary of the Treasury. Thanks. I'm sure you'll be covering the budget for us later today. Back to you, Francine.
Lizzie, thank you so much. Lizzie Burden with Darren Jones. And we'll have plenty more, of course, on the UK budget. We have special coverage, plus reaction and analysis. Our coverage begins at 12:15 p.m. with the Chancellor's speech at around 12:30. You can watch that in the UK on the terminal or follow our live blog on Bloomberg.com. And we'll be joined by John Stepek and, of course, our very own Stephanie Flanders. Now, later today, we'll also be speaking to the Chancellor of the Exchequer, Jeremy Hunt. Don't miss that conversation this evening here on Bloomberg TV. Much more to come.
So just seeing here, according to a reader, ECB may cut rates closer to June.
state of the industry and what it's going to look like in the next couple of years.
At 4:30 Eastern Time, we do get the UK construction PMI, forecast of 49 on the prior 48.8.
It continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, you know, movie-going begets movie-going, right? So when there's a season filled with, you know, good movies that people want to see, you know, I was made to feel pretty optimistic about what we saw in the summer.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Now still with us, Michael Strawbeck, Chief Investment Officer at Lombard Odier. Michael, thank you so much for sticking around. We talked quite extensively about the U.S., some of the opportunities there. I don't know what you do with China. I mean, you have you're a little bit different to everyone else who says we need stimulus. You say they need to be very cautious in what kind of stimulus, and actually they should focus on stability of the currency first.
Yeah. Look, so China is in quite a precarious situation. So growth materially has slowed down, and they don't seem willing or quite sort of grabbing the challenge of that growth by stimulus right now. I think it is driven by, as you say, stability. They don't want to be seen as having overdebted situations, default situations like we've seen. And finally, and this is my thinking of China in general, China is caught in this wind of change of the fracturing world, as we call it. Obviously, they're feeling strong headwinds from the US in terms of maybe support for the war in Ukraine, or at least the tacit support. But more importantly, we're in a Cold War situation between the US and China on tech. And I think they're taking stock of that before they go forcefully on stimulus. So I've taken out Chinese assets from our strategic portfolios, and we will look at it from a tactical perspective only.
But Michael, so you also worry about deflation in China. Is China kind of on its own, or could it actually also impact, you know, world inflation prices here?
It absolutely can. It may actually make the jobs slightly more easier for central banks outside China. But China into deflationary tendencies is not good in total. Maybe short term it will help a bit the central banks, but long term for sure China cannot end up in a deflationary scenario, which is
because they're not consuming?
They are not consuming, they're saving, and they're not stimulating.
What's your take on Europe?
Caught in between, I would say, needs to stand on its own feet. Let's see what happens in the US. If Donald Trump comes back, Europe will feel a very strong cold wind to take responsibility for its own security and defense, show more commitment to, if you will, the US as well, by the way. And ultimately, I think the US election caught in between China is really Europe's moments of truth to look ahead 10 years and get its houses in order.
Are there any tactical plays? I know I had a big Wall Street bank saying actually they've identified 7 companies that should rival the Magnificent Seven, but that the share price is just not following through because they're based in Europe.
Yeah, sure. There are. I mean, there are fantastic companies in Europe. My home country, Denmark, has fantastic.
Just less than 5 minutes until we do get the UK construction PMI, forecast of 49 on the prior 48.8.
A global business model, a monopoly-like situation, strong balance sheet and strong earnings. And there are some in Europe for sure.
Okay, Michael, thank you so much, as always, for coming on, especially coming in the studio. Michael Strobeck, their Chief Investment Officer at Lombard Odier, with a good conversation around the world. Coming up, we'll look at London's environment for fintech startups as the city faces growing competition from Paris and New York. That is coming up shortly. Then we have a full roundup of some of the big market moves. One theme that we really want to talk on is record highs for Bitcoin and gold seem to be sending mixed messages about the appetite for risk across global markets. Now, Bitcoin has jumped 50%, of course, helped by inflows into recently minted U.S. exchange-traded funds. What that means longer term is something we need to keep an eye on. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Why should somebody want to be in the pharmaceutical industry? Why not go into something sexy like private equity?
In the end, what we do is we create these miracles that fit in the palm of your hand, these little medicines that can transform a human being's life.
This week, Bloomberg brings you the latest from China's annual National People's Congress, including China's budget plans, economic outlook, and geopolitical tensions. Continuing coverage this week on
1 minute.
Context changes everything.
Now, UK Chancellor Jeremy Hunt is set to put personal tax cuts at the center of his spring budget as the general election looms. Donald Trump and Joe Biden dominate on Super Tuesday with a rematch of the 2020 presidential election, now looking more likely than ever. Plus, markets eye 2 days of testimony from Jay Powell on Capitol Hill. The Fed chair is likely to signal there's no hurry to cut rates. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix.
10 seconds.
Now, the new UK boss of Revolut said London's role as a fintech hub is under threat. With growing competition from Paris and New York, Francesca Corlesi has signed up to
49.7, 49.7, higher than the forecast of 49.
policies. Now, at the same time, a government-backed task force has called for investment in women-led ventures to drive the UK's ambition of becoming a tech superpower. Well, joining us now for more on all of this On budget day as well, I should add, our city editor, Catherine Griffiths, and June Angelides, investor at Samos Investments. So thank you both for joining us. Catherine, first of all, can you paint the picture of actually how, I mean, June lives this day in, day out. It's VCs, it's trying to raise money, giving women a better chance. But how does it feel actually for city people?
I think it feels in some ways positive. So Revolut has this new boss in the UK, Francesca Carlesi. She herself has been a founder before. She created a digital mortgage business called Mollo, and she's taken on this really, really interesting role at Revolut, running the UK business, which is right in the spotlight of whether or not they get the banking license. And I think her kind of long experience, she was saying, shows that London had this amazing kind of time after the financial crisis. There was this real sense that it was the place to be if you wanted to create new startup banks. And that continued for a long time. And she's still really positive about London. She's very, very European. She's worked all over the world. But she does think that in the last few years, perhaps, there's been this sense of the talent pool diluting a little bit. There's New York, kind of counterintuitively, we think of New York as being this huge finance centre, but in terms of fintech, that being a more recent thing. And then, of course, on the continent too, that sense of the Macron policies, or just that sense perhaps of whether people want to be inside the Eurozone. And of course, in London, we're not.
Yeah, we're certainly not. Juno, you live this day in, day out, and I know you've called for, first of all, more investment in women entrepreneurs, but also more angel investors. What's hard? Is it the access to capital when you start out?
Yeah, access to capital is a very, very big thing. I mean, if you look at the stats last year, funding dropped significantly to female founders, but in general, the landscape is very hard. But I think a few reforms that have been put into place recently, especially around pension, hopefully will enable businesses to access a larger pool of capital. And it's great for pensioners because the money will be put to work.
Yeah, I mean, this is the British ISA that we were talking about. Yeah. I mean,
and we have also posted out the UK construction PMI report on the FJ feed for all of those who might be interested.
Yes, I think probably we get something on the British ISA, and while the kind of name is jazzy, actually what that will really mean is maybe a bit more complicated, because it might be things that are listed in London, but of course that can be all sorts of things all around the world. But that plus some other reforms to sort of try and move pension fund money in particular into growth assets could create some opportunities for UK fintechs and other things too.
And June, what's interesting about what you've been trying to push for is also it's actually at education level. So it's inspiring girls, in the classroom to not only have role models, but I guess to have task force that will propel them in becoming high growth entrepreneurs.
Absolutely. I think the shocking statistic was that only 81% of students were able to name a sort of a role model in tech, and they were male. And I think, how do we lift that number? A big objective of the task force is to increase that number, putting more material in school, especially with Women's Month. How do we raise the profile? I think the media really helps with that.
I mean, one of the questions that we try and often discuss on the UK show is actually, what does the City of London stand for? And I know the Chancellor has always tried to push this idea that the UK can become the next NASDAQ, that actually he does want to focus on tech and entrepreneurship. But is it still insurance and banking?
Yeah, I mean, it is insurance and banking and professional services. But I think everyone can see that, the UK and London in particular is this incredible hub of talent. And that does stretch from tech to science, amazing universities, great campuses. But I think we've heard a lot of rhetoric from Jeremy Hunt, and he is pretty popular actually out there in the city, but really not a great deal of concrete action. And I think it's going to be really interesting to see how people feel about what is to come in the budget, and if indeed we do get the national insurance reduction and all the rest of it, whether actually people might prefer a bit more focus on these sorts of topics which sort of propel us into the future.
And June, I mean, you have some great statistics, right? And for example, there are some task force that this government wants to put in place. Now there's a general election. Doesn't look like they'll be around for much longer. I could be wrong, but that they really want to increase the number of female entrepreneurs. And again, how difficult is that? We have a huge labor shortage in this country. So does that accelerate things?
Yeah, I think there are a lot of great initiatives being worked on. The government has put aside quite a big, significant amount of money to increase the amount of AI talent. Minister Caulfield recently spoke about a budget being put aside to help with returnships. I think we have a large untapped talent pool with women who have left the workforce for childcare and how to get them back in. I think training them up is a great way, but we also need the corporates to play a big role in making it an inclusive environment for them to join.
I mean, the other thing, so you also focus on coding for females, and actually for a lot of mums, but also females in general. I don't know the interplay between coding and AI. Is it more necessary to have coding skills with AI, or does that get taken away?
Well, I think AI and natural language has made it a lot easier to be able to understand. And I think what we need to see going forward is just people's interest, curiosity. I think that's what excites me about coding. How do we get people to think outside the box? How do we help them to understand the power to transform their ideas and make an impact in society?
We're all a little bit obsessed with Revolut because of the banking license and what happens to this. Were you impressed by the plans going forward, or so many still question marks?
Yeah, I think there are lots of question marks still. Revolut's been trying to get this banking license for 3 years. But I think one of the sort of interesting dynamics of that is it's become so sort of big without the banking license. It has 40 million customers around the world, 8 million of those in the UK. And of course, not all of those people are using Revolut all the time, but it's still quite a large number. And so that decision by the UK regulators about giving them the license, it's just a lot more loaded than when people get licenses when they're a bit smaller, and the stakes are not quite so high. So I think they are showing signs that they are kind of ticking off their problems. They're sort of trying to get in control of their accounts and things like that. But yes, questions still to be answered.
Catherine, you always have such a good, pulse of what the city wants. What are they expecting from the budget? I don't know whether it's a downbeat. I had a big investor in, and they were saying, like, look, the budget's fine, but they're probably not in charge.
Yeah.
In a couple of months, certainly, by the end of the year. So does it really matter to the people of the City of London?
I think that's the real challenge. I think they definitely, don't want to see anything rash. They don't want a sort of Kwarteng-style budget, and they don't expect to get one. But I think that's the problem. They don't really expect it to be a lasting thing.
June, is there anything that entrepreneurs need from the budget? Again, it's a bit precarious for this government right now.
I think in general what people are looking for is a bit more stability, just an understanding that the government is going to stick to the promise, a bit like what you've just said. How can they make plans if they're not certain about what it's going to look like in a few months from now? And back to that point of attracting talent, making the UK an attractive place so people come and they can access the talent they need to grow their businesses.
Yeah, it's but I think it's the trickiest budget yet, because they have to probably win votes. They don't have much money to play with, and they want to make sure that the markets are okay. Thank you so much for joining us today. June Angelidis, investor at Samos Investments, and Bloomberg's city editor Catherine Griffiths. Now, coming up, we're also joined by James Janowski, the global co-head of energy, power, and renewables at JP Morgan. He's live from the company's Clean Tech Stars Conference. So a good conversation on infrastructure and, of course, spending. This is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic, because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
It's Jobs Day, and Bloomberg has the report under surveillance.
We've had unemployment snapped at 4% for 2 consecutive years.
This is a two-sided sword.
There is a softening in labor demand.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
This is a very strong labor market.
The White House has got to love this.
This is something huge they want to run on.
Where is the slowdown?
If you look at the reality, it ain't showing that.
The February Jobs Report, Friday on Bloomberg.
Oil supplies may be running ahead of demand after a report of rising U.S. stockpiles for a 6th week in a row. Fears of slowing demand from China and surging supply from non-OPEC producers are also weighing on prices. Brent has risen by almost 7% this year due to tensions in the Middle East and higher transport costs. Now, to discuss all of this, we're joined by James Janoski, the global co-head of energy, power, and renewables at JP Morgan. He joins us from the company's Clean Tech Stars Conference, which brings together the future leaders of decarbonization. So, James, thank you so much for joining us. I mean, one of the things that we keep on asking a lot of our guests and a lot of head of commodities tell us is that we're running out of things. And this is because there had been decades of underinvestment in oil and gas, but also in renewables. Do you worry that we're running out of things?
Good morning, Francine, and thank you very much again for having me join this morning. We're hosting our 2nd annual Clean Tech Stars Conference here at our offices in London. It's focused on private EMEA companies that are at the forefront of technologies that we need to achieve global net zero by 2050. As you think about your question, am I worried about running out? What we're worried about is making sure that we can help these companies get access to capital, because we need both. We need traditional energy, but we also need low carbon, green, renewables, clean tech, and the companies we have here. We have over 45 companies, the founders and management of these companies that are in hydrogen, e-fuels, battery storage, energy efficiency, carbon capture, the technologies that we need in addition to renewables, and as we make the transition away from fossil fuels. So it's a combination.
But James, is the right investment going to the right place? So again, I understand it's a combination, but actually, what are you most worried about? And then you also hear from, again, a lot of the big commodity producers that even if you go through transition and go for renewables, there's not enough copper, there's not enough of these rare earths out there to make it viable in time.
So it's a combination of, we need a few things. We need public policy and regulation to help be stimulating for investments. We need permitting to move faster, but we also need access to capital for these companies to be able to develop the resources, develop the technology, spend on the innovation. So it's a combination. It's not just one element to make the transition successful.
Who's getting it right the most? Again, how many investments, or how much in terms of money, a pool of money, needs to go where?
I think what's encouraging is if we look at last year, we $1.4 trillion of capital for energy transition, decarbonization, which is a record. The challenge we have is to scale that up to the $4 to $7 trillion a year that we're going to need between now and 2050. We've had some headwinds, obviously, with high interest rate environments, energy supply shocks. We've had supply chain disruptions, permitting being a bit slow. So it hasn't stopped. It's going slower than what everyone would like. As we saw the attendance at COP28 and then even at Davos, there's a lot of momentum for this from the corporate and the private world, public. So we're confident it's going to come. We just have to have a little bit more patience as this evolves over the next few years, and this to change the global energy ecosystem, to make sure that we have the ability to scale up to low carbon is going to take time. It's not an overnight event.
James, I know there's a lot of focus, of course, on raising capital to go into infrastructure for renewables or infrastructure for energy. Is this where the smart money is going?
The smart money is going across, so we continue to see capital being raised across all subsectors, renewables, so solar, wind, the grids, battery storage, EVs, clean fuels, as I said, some of the more emerging technologies. Capital's continuing to go. The issue is just because of what's happened for the reasons I said about some of the headwinds we faced last year, it's just slowed down the pace of capital coming. We went from 30 companies last year to 45 companies this year at our conference. We went from roughly 200 plus investors last year to 250 plus this year. That's to us quite encouraging that we continue to see companies grow, be successful, but investor interest be there from, as you said, venture capital, private equity, it's infrastructure, it's a combination. I think the other thing we're seeing is the big corporates and the big strategics are also continuing to put more and more capital into helping these clean type companies or these smaller type companies grow up so that they can scale up and also deploy their technology quicker.
James, when you look at, your basically the teams joining you at this conference today, I think you have growth companies, highly successful growth companies that raised some $7 billion of capital over the last several years. Is it easy to raise capital across the board, or is there a region that actually is more in tune to raising capital in this space?
So what we're seeing right now is it is quite challenging. I think globally, for the reasons I said, but we're starting to see the green shoots. We're starting to see the public equity capital markets open up, which is always a good thing. We've seen policy in the U.S. with IRA obviously be supportive. We've seen the UK and EU adopt new policies and new incentives and subsidies. I wouldn't say it's one specific region. What it is it comes down to companies that are able to demonstrate that they have the technology, that they're beyond the pilot phase, they're scaling up to be commercial, and that they have an end market demand, and that those companies then are able to go and say, you know what, I would like my next round, whatever that is, a C round, a D round, an E round of growth capital, because I've proven, and there is demand, there's fiscal policy around it. Those elements are really just global. So it's not one region, it's quite specific. But overall, the fact that we saw more capital raised last year gives us a lot of encouragement, and the momentum just in the market that we see talking to clients and investors is quite encouraging.
Great, thank you so much. James Janeski, they're the Global Co-Head of Energy, Power and Renewables at JP Morgan. Now coming up, as the UK Chancellor prepares to deliver his spring budget, we'll look at why gilt investors will be hoping the whole statement is actually uneventful. That's next, and this is Bloomberg.
In tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
This is Bloomberg.
So just a few hours until the final UK government budget before the election, but could disappointment for voters turn out to be a bonus for gilt markets? Well, Bloomberg's markets reporter Justina Lee is with us now. I mean, the UK, this is a very important budget, frankly, for the Tories. I don't know whether it'll have a huge impact on the economy given the looming election, but what are you expecting, Justina?
Yeah, I think the biggest headline, for all of us living in the UK has already been reported out in the press, which is that everyone's expecting a cut to the national insurance tax rate. And perhaps not yet, a cut to the income tax rate. But I think that's going to be a really important part of the pitch that the Tories are going to desperately bring to UK voters ahead of a potential election. But, it's kind of a difficult kind of dilemma for Jeremy Hunt here, because on the one hand, they do kind of want to bring more perks to UK voters, but on the other, he's not working with a lot of fiscal headroom here. So we're also going to try to see where he's going to find some of that headroom, potentially by extending a windfall tax, kind of on the energy companies and kind of what he's going to do with the tobacco tax and kind of other parts of the budget.
So how is the market positioned ahead of that?
Yeah, I think kind of another big picture structural question here is there going to be more perks for kind of the UK financial industry in particular? Because obviously going into this budget, there have been a lot of concerns about the lack of listings in the UK and also the lack of domestic investment in the domestic economy. And so there have been kind of a lot of chatter about whether there's going to be a British ISA, which could bring some tax perks just specifically for investing in domestic stocks. And that could, at least in the long run, provide some support for British stocks.
Now, Justina, one of the most read stories on the Bloomberg terminal is actually Egypt and the fact that they devalued their currency. What can you tell us?
Yeah, I think it kind of all speaks to the pressures that emerging markets are under at the moment. And for Egypt, it's been particularly difficult because they've seen kind of a deficit in their current account for quite a while, and that always brings pressure to the currency. But it's also been especially hard because with the conflict in the Middle East, that's hurt kind of trade in Red Sea and revenues through the Suez Canal. And so what we kind of got from the central bank today is, a huge rate hike of 600 basis points, as well as the devaluation of the currency, which kind of will bring it a bit closer to the black market rate. And also economists are expecting potentially a deal with the IMF coming kind of very soon.
Yeah, and we heard from the IMF that they were encouraging, of course, to tighten monetary policy because inflation is around 30%.
Yeah, exactly. And I think part of that is kind of a global story, which is that with the rate hike coming out of the U.S., a lot of kind of capital has left emerging markets. And I think this is a particular kind of dire case, but it's definitely the pressure that a lot of developing countries are seeing right now.
And then just, we're watching out for China and possible new policy coming from there.
Yeah, speaking of emerging markets, right? Investors were a bit disappointed yesterday because even though the GDP target has been kind of similar, at 5%. I think a lot of people were hoping for a lot more detail about the plan to get there. And we still didn't really get a lot of that detail today. I mean, apart from, the central bank governor saying that there could be more room for another, reserve requirement ratio cut, which is why we're seeing Chinese bonds rally today. And, also another ultra long central government bond sale to support development. But I think, people kind of are a bit skeptical after the lack of support that we've seen over the past year.
Justina, thank you so much, as always, for that wonderful markets roundup. Justina Lee. Now, another reminder for viewers in the UK, you can join us later for special coverage of the spring budget beginning at 12:15 p.m. The Chancellor's speech is then scheduled for around 12:30. Now, later today, we'll also be talking to the Chancellor of the Exchequer. Don't miss that conversation right here this evening on Bloomberg TV. Up next, though, Bloomberg Brief, Danny Berger and Manus Krani in New York. Have a great day, everyone.
Just less than 3 minutes away until we get our Eurozone retail sales figures year on year, with a forecast of -1.3% on the prime, -0.8%, and month on month with a forecast of 0.2% on the prior, -1.1%.
Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we can deal with in some way?
It's a real challenge for a lot of families, mine included. I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly. We want to be there for her, but it's painful for us to see the toll dementia has taken on her. This is rightfully, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California, San Francisco, has been actually one of the key folks, who has been leading some of that research on the impact of lifestyle and dementia. This is a promising area.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss.
Just less than a minute away now, I will be leaning with the month-on-month figure.
Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question. Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
10 seconds. 0.1%, 0.1%, lower than the forecast of 0.2%. Year-on-year coming in at -1%, that's -1%, higher than the forecast of -1.3%.
They call it Super Tuesday for a reason. This is a big one. And they tell me, the pundits and otherwise, that there's never been one like this. There's never been anything so conclusive.
Big tech troubles weigh on equities. The focus now shifts to Jerome Powell's testimony on Capitol Hill.
And more retail results roll in. We take stock of Nordstrom, the issues of a muted outlook. We're counting down to what Jay Powell says. We'll discuss Super Tuesday. Those equities took a smack yesterday.
Yep.
Down we went, but there's a small reprieve this morning. Tech really took a smack. It wasn't just contained to the questionable Mag 2 within the Mag 7. It was a pretty battered set of souls. Up a third of 1%. Apple manages to draw some reprieve this morning.
And we have posted out the full Eurozone retail sales report for January 2024 on the FJ feed.
Spiked high, up 25%. Yesterday evening, they gave an earnings outlook, blowout earnings outlook. This is in the cybersecurity space, up 23%, this morning. So again, it's that differential. It's the idiosyncrasies within technology that this market is beginning to divine. The NASDAQ up. This is about the elasticity of this bull run in this market. Citi talk about a stretch positioning, tech being the highest stretch positioning in 3 years, being extremely extended. Keep an eye on Apple, up a half of 1% this morning. We've given back 10% since December, $300 billion worth of market cap. The ever-hopeful Brits, they're waiting to hear what Jeremy Hunt has got to say on budget day. The red box, will it have a tax cut for the middle class?
Oh, I love the red box. Such good imagery, seeing him walking into 10 Downing with that red box. Maybe we'll even see it later today in this program. The good news about yesterday's sell-off in equities, Manus, was that your 60-40 portfolio actually worked. We bought into bonds yesterday. We dropped by about 6 basis points on your 10-year yield. Little change this morning. It wasn't just the profit taking in Apple, though. It was ISM, services, manufacturing. That data came in and it was weaker. Is bad news finally bad news yet again? It also set the dollar off. The dollar dropped dramatically on that. But today the focus shifts to Jay Powell, who will be testifying to Congress. Does he sound more like Bostic, that one and done language? Is the dot plot as it currently stands still appropriate? Meanwhile, Bitcoin, I mean, this thing is on fire, Manus. We went back above the 69 intraday record that had previously been set. But I should point out, it's not just Bitcoin, it is gold as well. Let me take you to the charts, because this is a rare thing. The fact that we saw both Bitcoin and gold hit simultaneous records. Now, I know I'm going to get IBs about this, so let me just make it clear. Nominal records, not necessarily in real terms, but they both hit the record. So even if stocks are faltering, Manus, there's still risk appetite and maybe haven appetite all happening at the same time.
I think you could probably create the argument that gold was more of a champ rather than a chump, but it is about where do you want to take a little bit of protection. If we are facing such extreme, let's say, elasticity in the rally within tech, where do you want to be? Or is it that you believe that the narrative from the Fed will be that we are one and done, and that this inflation is a little bit stickier than everybody's presuming?
Yeah, or if I can just be skeptical about the whole thing, maybe it's all just momentum trading. Maybe the tech rally was all just momentum trading. Maybe gold. Maybe it's just my algos. Maybe it's just the CTA is buying and there's no real reason behind it, Manus.
Well, hopefully there's a little bit of substance behind it. One woman that we can put that question to is, of course, Remy Oluputan. She is head of multi-asset growth and income over at Schroders. You are long gold. What timing, what beautiful timing to get you on the show and kick it off. You're long gold. We're trading at these record highs. How committed are you to it? And why are you long of gold, particularly at the moment?
Yes, we are long gold, and we're glad to see it's trading at record highs. It has been a struggle, though, let's be honest. It has taken a while, but we do think that gold will continue. There is a lot of bullishness right now if you look at the price. I completely agree that the momentum is strong, but if we just look at the facts, this is the perfect scenario for gold. What we are seeing is a soft landing. We're also seeing inflation still sticky but falling. This is all the merits that gold needs. And if we get confirmation that these rate cuts will definitely happen, This allows gold perhaps to take over from the dollar as a good asset to own in the portfolio.
Well, Remy, as you say, it's about time. It's been a long time running that gold has seemed underloved. But we got a little data yesterday that seemed to tip its hat to this idea that we will get more rate cuts. The ISM data coming out yesterday, the prices paid retreated. There were some cracks in the labor portion of that. Bonds rallied, as you'd expect they would. But amid all of that, we saw U.S. stocks fall. Is this bad news again, finally, or is it just an exhausted rally that didn't even care about the data?
I think it's more of an exhausted rally, and also allowing other areas to also do well. Because yesterday we did see small caps do very well, even within the market, retail stocks doing well, Bitcoin doing well. So it's time for a broadening out of the market, and that will require tech and AI related stocks to take a little bit of a breather to give space for other segments of the market to do well. So it's perhaps we can call it bad news for narrow markets and good news for market breadth.
You talk about market breadth. You say that you're modestly overweight equities. Where do you go for breadth?
Naturally, just looking at the charts, it feels like small caps, the smaller they are, the better the breadth. But we really need a catalyst. Right now, where we're getting the catalyst still is in the mega cap because the earnings are strong, but it's good to see some decent earnings in small caps. But value areas are decent as well. For example, financials, again, did quite well yesterday, despite the pullback in tech. Outside of the US, Europe is looking interesting, even other parts of Asia right now, Taiwan, Korea. There are interesting opportunities happening within the equity market outside of US tech.
Remy, we love to hear this because we have had, I don't know, man, I feel like every single guest that's come on over the past week has said US is the only game in town. So there is a bit of relief to hear someone say, actually, there are opportunities elsewhere. And if you look at the big opportunity in the US, it has long been Apple, long been the world's biggest stock. It's now lost that position to Microsoft. It lost enough market cap over the past 2 days that's equivalent to one Goldman Sachs, equivalent to one Morgan Stanley, equivalent to one Pfizer. I mean, these are huge numbers coming off the board with the loss in Apple. What does it mean from a bigger perspective if you have such a concentrated market and you have the world's biggest stock selling off?
It is a risk, and this is one of the things that investors need to really prioritize. The fact that when you have such concentrated markets, you can have such big corrections, whilst the rest of the equity universe is doing just fine. Yesterday, we had big positive moves in other areas too, but this was actually overlooked. And right now, our big call is it is a risk to overlook those areas because the concentrated markets, the correction we have seen in Apple and Google, actually, if you look at the charts, it's just a little bit relative to how well they've done over the last 18 months. But this poses a big risk for investors' portfolios.
Remy, we're going into Powell's day one of his testimony. We were looking at the break-evens. They are incrementally higher and have been trending higher over the past couple of months. So again, we saw Bostic fly this potential kite of one cut in Q3, then a significant pause. So they're reflecting on a playbook of the 1990s, the mid-1990s, 1995. There are the 5-year break-evens. They are trending higher. This is the war that they are trying to win. With that in mind, what does Powell do today? Does he try to constrain FCON without rolling over the US economy? What is the objective of this testimony over the next 2 days?
He has to be really politically careful. In our opinion, Powell will strike a very cautious tone. First of all, emphasize that actually the Fed has done their job in that inflation is coming back down, which is the priority. And also emphasize that to some extent financial conditions could do with loosening and the Fed will be very data dependent. We think that the Fed will prioritize addressing Congress over financial markets over the next few days. And that is why it will be a very cautious tone. There are too many stakeholders in play for Powell over the next few days.
Yeah, it's a tightrope for him to walk. You got 5 hours to prepare yourself, Remy. We'll all prepare ourselves for it. That's about all we have time for here. So pleased you could join us this morning. Remu Alupatan of Schroders. Yes, let's get some of the other top stories that are trending on the terminal this morning. OpenAI has fired back at a lawsuit filed against it by Elon Musk. The startup used the billionaire's own emails to show he backed its plan to become a for-profit business and pushed it to raise more money. Musk's lawsuit alleged the startup had strayed from its mission and had become beholden to Microsoft. OpenAI says that Musk was lashing out after trying and failing to make the company part of Tesla.
CalPERS, the largest U.S. public pension fund, is on the hunt for a new CIO. It's looking externally after a long stretch of lackluster returns and leadership churn. Jonathan Grable, the CIO of Los Angeles County Employees Retirement Association, is said to be on the shortlist of 4 candidates.
Bloomberg has learned that the UK Chancellor of the Exchequer, Jeremy Hunt, plans to cut 2 percentage points off the national insurance tax when he unveils the budget today. That's despite Prime Minister Rishi Sunak's preference for more expensive cuts to income taxes. Stay tuned. We'll have coverage of the UK budget, plus Bloomberg's conversation with the Chancellor himself later today.
Coming up, President Biden and Trump's sweep Super Tuesday, gearing up for the rematch in November.
And later in the show, Nordstrom's is falling. It gave a muted forecasted revenue. Slowing demand is hitting its high-end stores. This is Bloomberg.
I think I was around so many powerful people my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and any given day it would be the head of a studio, and just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it, because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Tomorrow, as the border, the economy, and the November elections dominate the headlines, President Biden will deliver his State of the Union address. Balance of Powers, Joe Matthew and Kayla Lyons will bring you live global coverage starting at 8:30 p.m. Eastern. Bloomberg, context changes everything.
There was a 90-95% chance or better that it was going to be Biden versus Trump.
This is a landslide primary victory.
Everybody whines and complains, oh, not these two, not again.
This is unusual in that we have seen both of these men govern, and different countries have experienced interacting with both.
This is an opportunity for Nikki Haley to get out and say, look, The time has come for us to unify.
You're going to have to get used to the fact that we're going to have a rerun. And that's just the way it is, and people have 8 months to adjust to it.
President Biden and former President Trump dominated Super Tuesday primaries, setting up for a general election rematch. Let's bring in Bloomberg's Anne-Marie Horton, who was watching all the elections yesterday. And here we are, Anne-Marie, probably where most people expected us to be, a repeat of 2020.
Yeah, it's a pretty boring Super Tuesday in the sense that we kind of knew what the outcome was going to be. At this point, it's just waiting
Seeing here,
for
the Bank of Japan is said to get more confident about stronger wage growth.
Parties' nominees, which we could see potentially in a few weeks.
Also saying that Bank of Japan officials are said to have differing views on rate timing.
Of course, a question that everyone's asking is, what does Nikki Haley do? She was able to pick up Vermont. We need to note this is almost a token win. It's a deeply liberal state. Republicans haven't carried this state in more than 30 years, but it was her first state she won. She only won the District of Columbia. And the big question weighing on her campaign now, she's still out there fundraising. She hasn't booked any TV ads. She didn't do any events last night. They did send out a statement after, when former President Donald Trump was in Mar-a-Lago. He took to the podium, talked about unity. Her team sent out a statement saying that unity is not achieved by simply claiming we're united. Today, in state after state, there remains a large block of Republican primary voters who are expressing deep concerns about Donald Trump. What she's getting at is the fact that in all of these states, some of them she's still bringing in 20, 30% of the vote. So what we can view from this data and all of the primary data is that Donald Trump has a steep battle to climb when it comes to November and making sure he gets those independents who potentially lean right to actually go out and vote for him. So the question is, what do these Haley voters do come November?
Is that where the I mean, victory for Biden and for Trump essentially taken, but where was the weakness? If you can analyze this data in any way, I mean, I know there is, Samoa is not exactly the biggest place in the world, but, he did lose. It's a tiny, tiny place. But Minnesota, there was an uncommitted vote. So Biden has some issues to contend with. If you were to weigh up what was the biggest issue for Biden and the biggest issue for Trump as you walk away from Super Tuesday?
Trump is general election electability. Can he bring in those people that he lost as well, that potentially voted him in 2016, he lost in 2020? Can he get them back? For Biden, America, Samoa aside, less than 100 people voted. But Minnesota, with the votes we have tallied now, it's almost 20% who voted.
This is the uncommitted.
These are the uncommitted votes, and it's a protest vote. And what's interesting about Minnesota is they weren't as quick to gather and prepare for this uncommitted the same way Michigan. People were out in Michigan making sure they were rallying individuals from the progressive left to vote uncommitted. Minnesota didn't have that same kind of ramp up. So it's still interesting he has 20% uncommitted there. So Biden has more work to do with some members that are his base, while Trump has more work to do with the general electorate.
Can any of that work be done and accomplished in the State of the Union tomorrow?
Well, the State of the Union is high stakes, everyone's saying, for President Biden. And I'll repeat what I said to Manis yesterday. It's less about what Biden says, and it's how he says it. The question facing Biden, the biggest question, is about his age. We saw that in our swing state poll, and we saw that a slew of polls over the weekend, most notably the New York Times. More than 60% say he is, quote, just too old to be president. So he needs to come out and give a reassuring message, and the way he does it, how he speaks, that's what everyone's going to be watching.
I think that's going to be down to how they collateralize what he says. In other words, how they disseminate what he says, not just on TV, but then how they use it on social media. And that's a big part of their plan.
It is, because viewership for the State of the Union last year was 23 million people. The Super Bowl was north of 120 million people, and they decided not to do the sit-down Super Bowl interview. So they have to get his message out from this huge State
Well, they're on TikTok now. So they could clip up his State of the Union and
is
put
on TikTok. The White House is not, because if you work in the government, you cannot have TikTok on your phone.
See, the subtleties of TikTok. They just want to get Danny on board with the campaigns. Let's talk about the backers. You talk about Nikki Haley. Obviously, the Koch brothers and different people had been backing her, perhaps stepping back. But when it comes to lunch, it was a big day on Sunday, or at least a gathering. Elon Musk, we understand, met with Donald Trump. What's the significance of Musk potentially backing Trump? Because he has made some noises about the border. He said Biden's border policies amount to treason.
And when Trump was in power, he also had some choice words for the former president as well. This would be very significant given how much money Elon Musk is worth, third richest man in the world. And Trump has a campaign donation problem. He's used a ton of money, more than $50 million, to pay his legal fees. On top of that, Biden is sitting on a massive war chest. He is trouncing him when it comes to the ability to spend money on this campaign come November. So if Elon Musk was to back Trump,
will the dollars that you spend just simply trounce your challenges at the polls in terms of what the electorate think? I mean, that is the debate, isn't it?
Well, yeah, you need a lot of money to run an election.
But 130 to 30, is it just the dollars you spend wins?
So after the money, then I think Elon Musk brings a certain level of cachet potentially for the Trump campaign, and this could potentially be, he's very vocal on Twitter. This could potentially be someone that elevates him and helps him get out the vote. But we should note at the moment, no campaign money has been sent so far from Elon Musk to former president. The New York Times is reporting that he was at this Mar-a-Lago lunch.
I wonder what they had.
See, all the excitement was outside of Super Tuesday. It wasn't the races itself. It's everything that happened around it. That's where the excitement is.
Great context, Anne-Marie, there. We're just looking at Elon Musk. He's worth $192 billion. Danny, there you go. He dropped $5 billion yesterday.
Painful.
Yeah.
Painful stuff.
I don't know how that feels to lose $5 billion.
We'll never know.
Have the 5 in the first instance would be a start. Anne-Marie Horder making Super Tuesday come alive on your screens at 5:20 a.m. from New York with Danny and myself. She will be on for the next 3 hours. Politics at the top of Bloomberg Surveillance's agenda. Check the markets, Danny. Here we are. We're bouncing back. I mean, we got trashed yesterday in these equity markets. SPOOs were down 1%. NASDAQ was down 1.8%. The dollar drifts lower and yields ticking a little bit higher. What will Powell say today?
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words and then you put a few sentences together, and one day, you might be able to write poetry.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Next time on The Deal.
I realized a long time ago that being a football player or an athlete, you can get into a room, but once you get in the room, you have to prove that you belong there. But what keeps you in the room, right? It's your talent. It's the talent that a lot of people don't see or don't think you have because they've only seen you in one way. And for me, the biggest pivot was getting out of my own way, telling myself that I'm more than just a football player.
It is Bloomberg Brief. I'm Manus Crenny alongside Danny Berger. So Wall Street, we know, is in shake-up mode. And the lady of Wall Street, it is Jane Fraser. She was at the RBC Capital Markets Forum yesterday. I mean, I think the language, to me, it's just says everything about change. There's nowhere to hide. And she says that the reorganization has gone swifter than they expected. Now, this is the kind of narrative the market wants to hear. And she was rewarded. She knew she was doing it at that Capital Markets Forum yesterday.
Yeah,
very, very clearly talking about the strategy. It's ahead of course. And if you think you're going to lie low in this place, you can forget it. There you go, up 7.8% so far this year.
Well, this is a huge reorg with many folks losing their job as part of it. And this is the question. How quickly can you turn around a ship as large as Citi? Now, one of the things that she did point to was better capital markets, better environment for investment banking. And part of that is the rate cut narrative. Not to bring this back to the macro, but can banks really bank on that if we're not going to get as many cuts?
It was interesting that she drew the differential between what's happening in Europe and the challenges that they have relative to the USA. The USA just feels more on the front foot. And of course, she has just hired Vivas Raghavan from JP Morgan.
Well, contrast to that, Morgan Stanley, according to Reuters, laying off 9% of their asset management business in China. So there's definitely a regional difference when it comes to these big banks.
Julie Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park. And that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
This is Bloomberg.
Welcome back to Bloomberg Brief. I'm Manus Crenny in New York.
And I'm Danny Berger. Here's what you need to know.
It's a rematch. Biden-Trump appear to be on as both contenders dominate Super Tuesday. Meanwhile, Nikki Haley manages a token victory in Vermont.
Big tech's troubles weigh on equities. Now the focus shifts to Jerome Powell's testimony on Capitol Hill.
And more retail results, they roll in. We'll take you through the stock Nordstrom and the issue of a muted outlook.
So Nordstrom's drops pre-market. It was an ugly day yesterday. I have to say it was pretty amazing to see equities sell off, but even in an environment where we got bad eco data. Usually the equity bulls love that kind of stuff.
Yeah, but don't worry. The bond market's managed to rally. So maybe bonds are finally doing what they're supposed to do on a bad day in equities.
Yeah, maybe 60-40 is back. That would be exciting.
Drum roll.
But bonds aren't doing much of anything this morning. We did drop by about 6 basis points yesterday. Here you go. Little change this morning. All eyes turn to Jerome Powell and his testimony on Capitol Hill that starts today, takes us into tomorrow. Is he going to sound like Bostic? The question at the moment is the dot plot still relevant? Are we looking at something maybe more like one cut this year? Or maybe if you're Torsten Slok, you think it is no cuts. We had ISM data. This is what I was mentioning to Manis yesterday. ISM data that was particularly weaker than expected, especially the labor component. What does that mean for the jobs data on Friday? That sent the dollar lower. It is still weaker this morning. Euro up about 0.2% versus the dollar. We're at 108.78. Bitcoin, meanwhile, hit a new all-time record. And again, Manis, it and gold together hit a simultaneous record, which is something that's quite odd. But let me say this again, just be clear, a nominal record, because you know, Manis, someone's going to message me and say, no, on real terms, it wasn't a record. But hey, a record nonetheless.
Yeah, don't worry about the pedantic people like that. We've just had Schroeder's on telling us that gold could usurp the dollar. Not usurp, but certainly challenge the dollar as a dominant trade. Schroeder's, Oli Remy Putin being long gold. We've managed to claw a little bit back, and there's a couple of names that are certainly worth focusing on. You've got CrowdStrike, cybersecurity company, nice guidance for them. The stock up 23% unchanged this morning. Roll it over and have a look at Apple, because Apple has lost 10% of its value since Christmas time, $300 billion. Is that an opportunity for you? Is that because they're just AI light relative to everybody else? Either way, these equity markets have managed to claw a little bit back. The debate is this. It's about the elasticity of this bullishness. That's how I've sort of framed it. You've got various notes talking about stretched valuations, concentration risk. Citi say we have the most extreme positioning in tech in 3 years. It's extremely extended or not. We'll discuss that with Amy Wu Silverman in just a moment. And in the United Kingdom, what will they get from Jeremy Hunt? That is the question. We're up a third of 1%. We're expecting some kind of a a national insurance cut, and a lot of evangelizing about how to reinvigorate UK PLC equity market. Danny.
And maybe we'll get a sight of the red box later today. Manis, I do think it was quite remarkable to hear from Remy over at Schroeder's that there is an alternative. It's not just all about the U.S., that now is the time to start looking abroad, start looking at some Asian regions, maybe not China, but to look to that for your equity allocation. Because we've heard from how many people over the past week that the U.S. is the only game in town, and that makes people feel quite uncomfortable.
But of course, our next guest has a little bit of a contra to that. She talks about the flow of money, perhaps not washing into China, and that's got a backwash effect into the United States of America.
Well, let's get to our next guest, because she's looking at what investors are anticipating. And she writes that in the post-COVID regime, the right tail is the new left tail. Basically, the biggest fear of the investor is for the upside, not the downside. Joining us now is Amy Wu Silverman, head of derivative strategy at RBC Capital Markets. Amy, I think this is such a brilliant way to put it, because you see it in the derivatives markets, this insatiable demand for calls and then poof, nothing for puts. But how vulnerable does that leave this market to the downside if that's where the options buildup is?
You know, good morning, guys. Look, when you look to the left tail, there is very little demand for it. It's at historic lows. But in some ways, I feel like the girl who's cried wolf, because I've been saying this over and over. And what has the market done? It's continued to go up. So timing is always an issue in our market. I thought yesterday was interesting. We finally got a breather. What did the option markets do? Folks went in and bought more call options. That's the activity we saw across the board. And then the other thing we saw was people starting to sell puts in names like Apple, essentially saying they think that perhaps it's hit a bottom. So the sentiment continues to remain quite positive, even on days like yesterday.
All they need is one magic wand of an AI news and presentation, and we'll be off to the moon. Now, you talk about seminal events. Some of them are black swans. We don't even know what they are. There are gray swans. And you identify a clearing event as being the AI conference for NVIDIA on March the 18th. Why could that be a clearing event?
Yeah, so, we've started to back test essentially how long momentum lasts in the post-COVID era, because once you get into these momentum cycles, it's very difficult to break until you get some sort of new information in the market. That could be earnings, it could be an analyst day, it could be something like this conference, which occurs on March 18th. The reason we think it's important, it's also going to be in and around options expiry. So you're going to see a lot of technical movement from options positioning anyway. And then obviously this is an opportunity, particularly for NVIDIA, to present some sort of new data. So we could either see this momentum start to flag, or it could be the beginning of an entirely new cycle, frankly.
And in the meantime, Amy, we talked about a bit about this in the break, is some of these specific names that are so loved by derivatives traders. You look at Palo Alto. I told you this, I have friends calling me up saying, hey, I've dove back into Palo Alto calls. It feels like 2021 yet again. And you've seen the volatility within Palo Alto's share price, down 28% in one day. And here you go, that's that record call option for Palo Alto. Amy, does this feel like 2021 in terms of the kind of YOLO retail trader, or something different happening this time in 2024?
I think it's such an interesting observation, because I kind of sit around thinking, hey, I think I've seen this movie before. And there is this retail component. Retail investors, I would say, just in their public consciousness, are much more aware of options as a toolkit. There are a number of reasons why this is true. There's gamification, there's the ease of trading them. But then I would say that institutions too have started to hop onto what originally was a retail trade. And the third thing I would say is, I think that the Bitcoin rally helps. These things are actually inextricably linked. And I think the wealth creation that you are seeing in Bitcoin is fueling a son of the YOLO momentum that we've seen in 2021 and we saw during May of 2020 as well.
But is that a firm base? Because you need institutional flow. I know institutional concentration risk is intact, the flow is intact. We get all of that. But if you have frothy retail or meme-esque flow, it's not exactly a solid pillar.
Yeah, and I would say, Manus, that there definitely is institutional money behind this.
Yeah.
That has become extremely clear, because it's not, first of all, if you just think about the names, there are actually a lot of high quality names this occurs to as well. You could call it the Mag 4 or what have you, but you're seeing the signs as well. And the second thing is, I would just say anecdotally, I speak with institutions all day long, and I can tell you that this implementation is something that they're looking at, frankly, because it's a way to keep a toe dipped in the water, and they think of options as a quick way to keep that toe dipped in the water in case they have to jump in the pool. It's an upside leverage mechanism that people are just generally more aware of, and that help you participate in that upside cycle should it occur.
Amy, you also write that investors are starting to focus on the U.S. election and the policy risk for it. Where are you seeing that?
Yeah, I'd say our conversations have finally started to steer more towards elections. It certainly is going to feel like the longest general election we have, but people are starting to ask about policy. So we know it's going to be Biden. We know it's going to be Trump. Great. What does that mean for sectors? What does that mean for stocks? On the Trump side, folks are looking at tariffs. They're looking at what instability it could mean for Europe. On the Biden side, they're re-talking about infrastructure, about IRA. And then finally, I would say financials is another focus. RBC's Financials Conference is actually going on right now, and that's a sector that tends to perform well heading into election.
Well, you made news yesterday with Jane Fraser, don't worry. It was one of the stories that we featured just a short time ago. You talk about drilling into policy. The one debate is for the bond market in terms of debt and debt issuance going into 2025 and the scale of the fiscal deficit. Are people asking you more questions now about that, and perhaps some kind of an exogenous shock in the bond market? I know it's out there, but is it being talked about?
Well, I'll answer this question by sharing one interesting statistic with you. We always measure the spread of the high quality basket of names versus the low quality basket of names. Low quality obviously having more debt, higher leverage than the high quality. That spread in terms of hedging usually trades around 5 times. It's trading around 12 times right now, Manus, which means essentially the options market is charging more of a premium to hedge your low quality names. So essentially, to answer your question, it is becoming a concern, even though you don't see it in the overall left tail. It is a concern in these stocks where there are high debt maturities and folks are charging more to hedge them. It's just an undercurrent that you don't see in the overall market.
An interesting under-the-hood observation, Amy. Great way of answering the fiscal question. That is Amy Wu-Silverman, RBC Capital Markets. Day 2 of their forum continues today. What more news can we get from that? Coming up, we're going to go back to retail. Nordstrom falls, sluggish demand, high-end stores under pressure. We speak to Dana Telsey of Telsey Advisory Group in just a moment on retail.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the 2 big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
Why should somebody want to be in the pharmaceutical industry? Why not go into something sexy like private equity?
In the end, what we do is we create these miracles that fit in the palm of your hand, these little medicines that can transform a human being's life.
It's Bloomberg Brief. I'm Manus Cranny with Danny Berger in New York. So Nordstrom falling after the retailer forecasted muted revenue due to slow demand in its high-end stores while reporting growth at its discount rack stores. Let's make sense of it all. We have Dana Telsey, our CEO, Chief Research Officer over at Telsey.
OPEC Secretary General Al Ghai says Middle East producers remain ideal suppliers to India given proximity, and see OPEC members' share of Indian oil imports rising in coming decades.
Very clearly, it reinforces another rivet in the narrative of high-end pressure, lower to mid-range. The consumer is becoming more discerning and not trading down, trading judiciously.
They are trading judiciously. They are looking for value. When you think about Nordstrom's results overall, you saw that the rack business, which is the off-price business, was up nearly 15%. It's the full-line business that was pressured. And in both areas, you saw beauty do well. In almost every single retailer, beauty is what's performing category-wise. But keep in mind, the guidance at Nordstrom kind of bracketed consensus, and it's going to be a margin-pressured year in 2024.
On this idea of beauty doing well, because in Macy's, they of course said, oh, we're going to focus more not just on Bloomingdale's, but Bluemercury too. Target, they want to do more in-store partnerships with Ulta. Is this, I mean, this is the thing that horrifies me, those 13-year-olds on TikTok who have a 10-step beauty care routine. So is this the kind of growth area, the bet that this is here on out, again, if you have preteens and tweens who have decided they need 10 different types of skincare to function every day?
You said it. It is skincare that is attracting all the teenagers lately. But yes, beauty is what's working. There's newness out there. Keep in mind, you had the pandemic when people focused on skincare. Now they're focusing on color cosmetics. So Ulta's going to be reporting shortly. We look for good things out of Ulta with the read across from Sephora and all the different retailers talking about the outperformance of beauty.
The one thing that you also observe, and we're going to see more of this in the Macy's Bloomingdale's transformation, closing stores, upscaling, building out the Bloomingdale brand, which is a beautiful store next door to the office here. But you also talk about this transformation within Ralph Lauren. So there is an era of transformation to come. Or where would you describe that bricks and mortar transformation process at the moment? And how does it play out to allocating in the sector?
Bricks and mortar matters. I think the focus of bricks and mortar with digital, it's not a nice to have, a must have. And the reason why, the experience of shopping, people want that experience, whether it's for socialization or whether it's for the clarity of the offering that you're getting. And what you've seen happen is during the pandemic, a lot of retailers closed a number of stores. So now their base is optimized, and look what you have now. You have new formats coming up, whether it's a smaller Abercrombie & Fitch store, whether it's a Ralph Lauren store that's more compelling. And if anything, the physical engagement, also the functionality with buy online, pick up in store, return to store, it's what matters. So I think we're seeing retailers invest in their physical footprint. Talk about Nordstrom yesterday. They announced the opening of 22 racks. When you think about Macy's, they're expanding Bluemercury, they're expanding Bloomingdale's. With 500 full-line Macy's stores, I've always heard that 50% of their sales come from 150 of the full-line Macy's. So your best stores are your most productive stores.
But at the same time, you have someone like Target saying that they're also going to focus on, or they're going to start this paid membership program, which does feel more about online shopping. Because I was looking at it, you get unlimited, this sounds like an ad, but you get unlimited free same-day delivery for orders over $35 in as little as 1 hour, no delivery fees, 2-day free shipping. I mean, delivered in as little as 1 hour, I mean, that's faster than an Amazon Prime. Is that something that kind of, the idea is that it coexists and the market, the pie is big enough, or do they directly want to eat into Amazon's business?
I think the pie is big enough, but everyone wants to eat into Amazon's business. I don't think there's any retailer that said, oh no, I want to give it up to Amazon.
Right.
I think they all want their fair share and more.
If we look at this retail reporting season so far, and we talk about the high end, the low end, rack is going to improve. So we're trading down a little bit. When you look at lows, that tells me something else about what's going on with disposable incomes. We're coming to the end of the COVID money, and that is going to either be some kind of a cliff moment in retail or a slow drift. What do you think the implications are of savings rates dropping and the end, as we understand it, of the COVID monster bank accounts?
Well, a couple things you've had happen. We have seen the consumer being more discerning and more cautious in their spending. They've spent on services more than goods. Look at the effect of travel that's been out there. When you think about the savings rate, which is 3.8%, think about the fact that you have a job market and a labor market that's very strong, and you're being able to see wage growth now outpace inflation. I think the consumer is going to continue to be discerning. I think it's incumbent upon the retailers to deliver innovation and value in order to drive demand.
Can I ask, Manus and I had a little bit of fun with Dior's Birkenstock. You're writing about a closed-toe silhouette exceeding sandals. What is going on with Birkenstock? From Dior to closed-toed shoes, where are my classic, comfortable but
kind of ugly Birkenstocks that you just wear around, lounging around. I mean,
practicality.
Yeah, exactly.
They're there also. One of the things that Birkenstock has done, for those U.S. consumers that own a Birkenstock, on average, they own 3.6 pairs.
Wow.
And with the full price sales that they're getting and the carefully controlled distribution that they have, keep in mind, they only have 5 Birkenstock stores that are directly owned and controlled by Birkenstock. There's a path for growth. And what it's doing by doing the collaborations, you're attracting a wider audience. So you're going to have your regular Birkenstock customer, and you're going to have your new Birkenstock customer that's drawing appeal.
Yeah, Manus still hasn't bought me my Dior Birkenstocks. I'm quite heartbroken about it, actually.
Danny is that new customer. We had Nancy Tengler in the seat the other day, and what I'm wondering is your opinion on this. Walmart is something that she's owned for a very, very long time, okay? And she's been committed to it for many years. Yeah. But she identifies Walmart as being the smart leader in the pack when it comes to AI. Now, I know everybody's got to have an AI kind of evangelist moment. How does AI come alive in retail? It'll have my data, I get that. But take it beyond that. I understand they've got my data and they can market to me, but where will AI as an overlay within retail mean something to you?
So I can't wait to see what it develops into. And I think we're in the early innings of the forefront of companies investing in it and seeing the benefit. I think retailers are first learning. What it should be able to do, help you manage your inventory because you're going to better understand what your company, what your consumer wants. So you're manufacturing the right thing, not the wrong thing. And also I think efficiency in operations in order to basically be able to share how should you either manage the store, labor hours in the store. I think it's going to be able to be predictive selling, but operationally too. And we're not there yet in seeing what the opportunity is. I think 3 years from now, we're going to be at the beginning of it. I think it's a learning curve all the way with that technology, but adoption has to be there. It's not a nice to have, it's a must have.
I mean, you're talking more sort of about the operational side, which I think is interesting because as a consumer, you immediately think, okay, it's going to be bots selling clothes. But, I mean, maybe not that. But you talk about how the drive is to smaller stores, that more personalized experience when you go in. So is AI an anathema to that? Do you see stores pushing that and then having to pull back, saying, actually, people want that human-to-human in-store experience?
Well, they're going to get that human-to-human in-store experience because that personalization, when you're texting or emailing, you're going to be able to see that, okay, I'm going to bring them in at this particular time. Appointment shopping hasn't gone away, and I think it continues. But it's appointment shopping with your friends and the sales associate at the same time.
That sounds like a lovely Sunday out. I love that. Dana, thank you so much for joining us. Really appreciate your time. That's Dana Telsey of Telsey Advisory Group. Manus.
Yep, coming up, we're going to take a look at some of the market-moving events that set the agenda for the rest of the day. There is only one moment in time. It is Powell's testimony.
Top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All
these devices becoming smart devices. They all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. It's Jobs Day, and Bloomberg has the report under surveillance.
We've had unemployment snapped to 4% for 2 consecutive years.
This is a two-sided sword.
There is a softening in labor demand.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
This is a very strong labor market.
The White House has got to love this.
This is something huge they want to run on.
Where is the slowdown?
If you look at the reality, it ain't showing that.
The February Jobs Report, Friday on Bloomberg.
It's Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. Let's get you set up for your trading day this Wednesday. Here's a look at what's ahead. UK Chancellor of the Exchequer Jeremy Hunt delivers his budget speech in Parliament at 7:30 a.m. New York time. Then Fed Chair Jerome Powell, it's the big one. He'll testify before the House Financial Services Committee at 10 a.m. Eastern. Then we'll get the Beige Book of Economic Conditions released at 2 p.m. Plus remarks from Neil Kashkari and Mary Daly. And Manus, we are on watch if any of the Fed speakers, especially Jay Powell, hint that maybe the dot plot as it stands is no longer relevant.
Well, you know, we wax and wane on this dot plot, don't we? Between it is something you absolutely set your clock by. By the way, it would only take 2 people to move the dots a little bit lower, Danny, and we'd be down in the 50s, 55, 60 basis points of cuts. This is what we got for you on the equity side. Pre-market, JD.com reporting better than expected rise in revenue, adjusting its production lineup and cutting prices for the cost conscious. That's a theme that's come through. We just had that conversation on retail. Now, CrowdStrike, we've been checking this through the past hour, up 23%. The cybersecurity company guiding higher. And then Marathon Digital rises. You got that Bitcoin hitting a record, and all boats are rising within crypto world at the moment. Danny.
And I think that's so interesting that Amy Wu Silverman told us that because Bitcoin is rallying, it gives traders more firepower, specifically retail traders, to jump into these call bets. And that's part of why we've seen this thing where things like, you know, Palo Alto, Apple even, are seeing this huge call option interest around it.
Danny's friends are calling her, they're buying call options on Palo Alto. There's Bitcoin up 5%. Also keep an eye on gold and those that side of the business. We've had Schroders with us this morning. Gold rises. Remy Ali Putin is long gold and still committed to the trade.
Yep, and says maybe it takes the place of the dollar in your portfolio. All right, that's it for us. Surveillance up ahead.
Let me ask you about politics. You've been involved advising presidential candidates, and I presume presidents as well. You ever have any interest in serving in a senior position in the federal government or running for office?
Absolutely, unequivocally, no.
The aggravation factor isn't worth it?
It's the aggravation factor, but it's more importantly is I don't believe there's any integrity in it.
So you do give money to politicians, though, because that's the system, but you...
It's part of the game. I think, to be honest, I think there's a need for a multi-party system in the U.S. to give more people a choice about where they can throw their voter support and their political support, but also to cause the country to sort of come together by having everybody have a role in deciding what is in the long-term best interest of the country. I've often believed that Black Americans as a people and as a voting bloc should adopt the same position that the original founders of the Congressional Black Caucus had in early 1970. Their philosophy was enunciated like this: Black Americans should have no permanent friends, no permanent enemies, just permanent interests.
DOJ or other authorities
could face bigger challenges next.
It was going to keep
Green World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
When you have a productivity surge like we are having right now, you can have the economy continue to be fairly strong while inflation continues to moderate.
I don't understand the sticky inflation argument. If there is still a recession at some point, the market hasn't priced it.
All of the ingredients are kind of there for a sustained expansion of the U.S. economy.
It really does boil down to that we are simply not slowing down. Where is the slowdown?
It feels like we're in that kind of sweet spot of benign disinflation and Goldilocks.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
A double dose of Chairman Powell coming right up, live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance alongside Lisa Abramowitz, together with Anne-Marie Hordern. I'm Jonathan Ferro. Your equity market on the S&P positive by a third of 1%. Two-day losing streak on the S&P 500 at the close yesterday. The biggest one-day loss on the S&P since the middle of February. On the NASDAQ 100, the biggest one-day move lower since the end of January. Bramo, we've got Chairman Powell Volume 1 and Volume 2 in the next 24 hours.
So before we get to Powell, I just have to say about the sell-offs you were talking about. Is that a buyable dip? Does that even count as a dip? This is sort of some of the conversation that we're going to be having with Jay Powell. The question really is whether his threshold has changed, whether the January CPI really concerned him in a way that it seems to be concerning the market.
We said on this program yesterday that the week began at 10 a.m. Eastern time yesterday, and it really did. The services ISM came out weaker than expected, but the employment component of that, the appetizer for the payrolls report, back into negative territory.
48 from 50.5. And this, I think, is what really got people alarmed. Even though when you take a look at some of the business orders and things, there are some more positive kinds of signs. If the employment is weaker, this speaks to the suspicion
According to the Wall Street Journal, Nikki Haley is to exit
the
Republican presidential race.
Hours being worked. Take a look at some of the other indicators. It's not that great. And this maybe gave them some fuel.
It's early days, but so far February has not confirmed January going into Payrolls Friday. Before we get to Payrolls Friday, we need to talk about Super Tuesday and Reality Check Wednesday for Nikki Haley.
Nikki Haley, she's basically, Jonathan, at this moment, undecided what she's going to do, in the sense that her campaign put out a statement that seemed still very combative, talking about unity that is just not there within the Republican Party. She didn't have any campaign events last night. She didn't come out to speak. The question is whether or not she will remain in this race. She did win one state, we should note. Obviously, we knew what the Super Tuesday was going to be. It was anticlimactic. It's Trump and Biden. Both of them are set by the end of the month to shore this up. But Nikki Haley did win one state, which shows Trump still has work to do ahead of November.
Here's the reporting from the Wall Street Journal. Just drop in. Nikki Haley plans to suspend her Republican presidential primary bid in a speech, Bramo, later this morning.
Which some people have been waiting for. The key question now is, will she endorse Donald Trump for president? Because if she doesn't, does that create a problem for him, given the fact that he's having trouble swaying some of the moderate voters?
This would create a problem for him. And interesting, that's what she's going to be doing today, because to encompass the entire Republican Party, you know, if you look at some of these numbers, he is still losing 20, 30, even 40% in some states to Nikki Haley. To encompass the entire Republican Party, he needs to bring in some of those either fiscally conservative individuals, more moderate Republicans. So I imagine he is going to want her endorsement. Notably, last night, he didn't mention her name. He pivoted directly to Biden and the presidential election.
If you are just joining us, hardly a shocker. Hearing from the Wall Street Journal right now, according to people familiar with her plans, speaking to the Journal, Nikki Haley plans to suspend her Republican presidential primary bid in a speech later on this morning. More on that a little bit later. If you are just joining us looking for some price action, this is what it looks like on the S&P 500. Equity futures on the S&P positive by around about 1/3 of 1%. Into the bond market, yields yesterday lower. This morning, a little bit higher by not even a basis point, 4.1584 on a 10-year. Coming up this hour, Liz Ann Sonders at Charles Schwab as mega cap tech slumps ahead of Chairman Powell's first day on Capitol Hill. We'll catch up with Greg Valliere of AGF Investments as Donald Trump absolutely dominates Super Tuesday and Nikki Haley heads to the exit. And Lena Miller of China Beigebook as the country looks to defend a lofty 5% growth target. We begin with our top story. Markets bracing for day one of Chair Powell testimony on Capitol Hill. And US equities looking to bounce back after a sell-off across mega cap tech. Liz Ann Sonders at Charles Schwab warning to diversify from the Mag 7, saying, quote, yes, the stocks are over-owned and richly valued, but all or nothing makes less sense than periodic rebalancing in the interest of keeping concentration risk in your own portfolios at bay. There is a wide array of stocks stealthily performing better this year. Liz Ann, I'm pleased to say, joins us here in New York. Liz Ann, it's been way too long since we've done this in person.
I don't think we even heard the word COVID the last time I was sitting here with you guys. So I am so happy to be here.
And we're happy to leave that in the past as well. Let's talk about the market in front of us. Tech has been absolutely dominating. We've seen some weakness start to appear in the so-called Mag 7. What's the signal you're taking away from the recent price action?
Well, I've been saying that, yes, it's a bull market, but it maybe more of a duck market, you know, the old Michael Caine line of, you know, calm on the surface and, you know, paddling like the Dickens underneath. And there has been a lot of churn underneath, but you've had these interesting breakouts in areas that have been outside the sort of dominant conversation, like industrials, even within financials. And it's not really just a large to small. I just think that there are a lot of investors and there's a lot of money that seems to be itching to find opportunities outside of those dominant names, which aren't as dominant anymore. They're not even the 7 largest stocks anymore. Tesla's been leapfrogged.
Tesla got hit. The likes of Apple have been hit. The moves you're seeing elsewhere, is it sufficient to support the index, given the weightings?
It's a start. If we have to remember, if you go back to October of 2022, not last October, but, you know, the low, that was a week, a day marked by the indexes taking out their prior June lows. And memories are short, but that the indexes were weighed down by many of the same names that supported the indexes on the way up. But that October low in 2022, you had much improved breadth under the surface. And that's not a bad thing to see. You know, the whole general soldiers analogy, even if some of the generals have kind of
according to a poll here, Canadian dollar declined 4.5% to 1.3 per dollar in 1 year, equaling prior month forecast.
Capitalized companies, the zombies companies, are at the mercy of what goes on with interest rates, obviously. But I think it's all else equals a decent sign for the market.
Yesterday was fascinating to me. As John said, in some ways, the week started at 10 a.m. when we got ISM services, and it came out. Headline number, weaker than expected. And bonds bid, stock sold off. This is bad news is bad news. And that seems to be a new dynamic. Do you think that right now, the best case for stocks might be the Fed not cutting rates because the economy is just too strong and they can keep zipping along?
Well, I think you're probably right. And that's not a perspective thing. That, to some degree, is what has happened. This notion that the market has been solely moving based on the prospects for Fed cutting, yet we've gone through this pattern of taking March off the table, maybe even taking May off the table, shrinking the rate cuts down to 3 or so, consistent with the Fed. I'm not sure that the market isn't still over its skis with regard to that. But I think you might be right. There's the nuance of more significant weakness, especially if it shows up in things like employment, which we'll have to see what Friday brings, but you certainly saw it in the isms.
We came into this week asking, what's the most important thing? It's a big week on many fronts. We get the State of the Union on Thursday. We get the jobs report on Friday. A host of talk from
according to Aramco, Saudi Arabia sets April Arab light crude oil official selling price to Asia at plus $1.70 versus Oman Dubai average.
Kind of push to stocks, but doesn't like
bonds, and also for official selling price to Northwestern Europe at plus 30 cents versus ICE Brent.
The fiscal that's driving a lot of the growth right now and the future upside to some of the equities?
I would maybe replace a lot with some. So I think the fiscal impulse is there, but I wouldn't give it an extraordinarily high amount of credit for the strength in the economy.
And official selling price to the US at plus $4.75 versus ASCI.
I think what's most important this week is not the jobs report from a headline perspective, but the innards of the jobs report. To your point, Lisa, the metrics like hours worked, the differential between the establishment survey and the household survey, what you pick up in the household survey in terms of, full-time versus part-time. Is it more part-time for economic reasons? The labor force participation rate. So I think it's, fine-tooth comb analysis time in terms of a lot of these data points.
And this is what Constant Hunter of Macro Policy was talking about just yesterday. Hours worked, hours worked. If you want a sneak peek of the payroll survey here at Bloomberg, still 200K, the median estimate in our survey at the headline number. Do you imagine, Bramo, that comes in a little bit going into Friday after that read yesterday?
This is the confusion. Some people say it's a head fake. You can't trust one data point. Other people saying expect hours to actually tick upward because it was a seasonal issue back in January. So, I've read reports basically that are completely at odds and that basically leave me no the wiser.
Lisanne, it's been amazing to see. The last jobs report was 353, which is just absolutely ridiculous. Repriced the Fed aggressively, equity markets held up. I'm going to build on Lisa's question. Are we basically overestimating, or have we overdone the importance of monetary policy to this equity market, given what's developed in the last 2 months?
Maybe, but I think, first of all, I think the Fed's in a little bit of a pickle here. They're trying to sort of nuance things around long and variable lags. I thought it was interesting when, not so much the last FOMC meeting and the press conference, but the subsequent 60 Minutes interview, when Powell, instead of emphasizing rates of change like the 3-month change in inflation or the 6-month, he cited the 12-month change. And that might have been a more quantitative way to say, we're not ready yet. We want to give this a little bit more time. And in the case of, core PCE and core CPI, on a 12-month change basis, they're not anywhere near the Fed's target. And with the 3-month and 6-month having hooked up back again, you've got the likelihood of that 12-month turning back up.
What would you expect from him today? I always sort of frame this as a grilling on Capitol Hill. Then I have to remember that sometimes it's not. And it's just hours and hours of political testimony from lawmakers.
The soapboxes are everywhere. And, you put a microphone in front of them and you as an observer, you think, is there a question anywhere? Anywhere in here, is there a question? So, and, given that it's in advance of the jobs report, it's in advance of next week's CPI, PPI, I don't expect anything to be terribly market moving, but I wouldn't be surprised if, assuming it gets to the part where they ask them questions, they'll probably bring politics into the mix and ask about the election.
Well, what I find interesting is that both you have Republicans and Democrats kind of pushing for rate cuts, actually, more aggressively, for different reasons and in different ways. And at the same time, they're trying to message inflation. So we're going to get another kind of 60-minute speech from him, where he basically comes out and says, people are feeling pain. I understand that pain. We're being disciplined. Or does he come out and say, look, the market conditions actually do matter and we're taking that into effect, which is essentially what a lot of people want to hear?
I think market conditions matter, but one of the things that Powell has emphasized, less so recently, but I remember I attended that sort of infamous lunch that he did, I think it was in December of 2018 at the Economic Club of New York. And it was what everybody focused on was that he backpedaled from what he had said in September of that year. But he specifically said something I thought was more interesting, which is essentially the Fed's job is not to step in because of financial market volatility. If it threatens financial system stability, that's something different. But I think he tried to squash the notion of the Fed put simply specific to, say, the stock market going down. Again, unless it starts to be a concern about the financial system and or its plumbing. So it'll be interesting to see if he makes any comments of that ilk today.
Lisanne, it's great to have you with us. You're going to stick with us. The brilliant Lisanne Sanders there of Charles Schwab. Just to get you up to speed on some news. So the Wall Street Journal moments ago reporting that Nikki Haley plans to suspend her Republican presidential primary bid in a speech later on this morning. Just confirming here at Bloomberg, Anne-Marie, we will get those remarks in Charleston at 10 a.m. Eastern Time.
Reading through this Wall Street Journal report, Jonathan, though, Haley won't announce an endorsement Wednesday, so she's going to still stay on the sidelines. But it is important for Trump that she drops out because she's still bringing in campaign money, and he wants to make sure that money comes to him. When you look at November, the war chest that President Biden is able to amass versus Donald Trump, and he's using a lot of this money to pay off his legal fees, with her out of the race, that potentially loosens up some of these donors to pivot to him, and he can really start to ramp up.
Greg Valliere of AGF Investments joining us on this story in just a couple of minutes' time. Equity futures right now on the S&P positive by 1/3%. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. President Joe Biden and Republican frontrunner Donald Trump, even more clearly now, are set for a rematch in the general election after the pair swept Super Tuesday primary polls. GOP challenger Nikki Haley managed only a token victory in Vermont overnight, leaving former President Trump with the lion's share of Republican delegates. And as you were saying, the Wall Street Journal did report that Haley plans to suspend her campaign in a speech later this morning, making that tie-up even more clear. Bloomberg has learned that the UK Chancellor of the Exchequer, Jeremy Hunt, plans to cut 2 percentage points off the national insurance tax when he unveils his budget today. That's despite Prime Minister Rishi Sunak's preference for more expensive cuts to income tax. Now, Hunt's going to deliver his budget statement later in this morning. Morgan Stanley has laid off about 9% of its asset management business unit in China. That's according to Reuters. The headcount reductions are said to have started in December. They'll impact only about 15 employees, but China's economy has been facing multiple headwinds, from the real estate slump to geopolitical tensions. All of that means that there's pressure on its markets and its $3.8 trillion fund sector. That's your Bloomberg Brief. John.
Danny, thank you. Coming up next on this program, Donald Trump absolutely dominating on Super Tuesday.
They call it Super Tuesday for a reason. This is a big one. This was an amazing night, an amazing day.
That conversation up next, live from New York City this morning. Good morning.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Tomorrow, as the border, the economy, and the November elections dominate the headlines, President Biden will deliver his State of the Union address. Balance of Power's Joe Matthew and Kaylee Lyons will bring you live global coverage starting at 8:30 p.m. Eastern. Bloomberg. Context changes everything.
Chairman Powell coming up a little bit later this morning. Here are the scores for you on the S&P 500. Equity futures positive by 0.4%. Yields higher by almost a basis point. 416 on a 10-year. Under surveillance this morning, Donald Trump absolutely dominating on Super Tuesday.
They call it Super Tuesday for a reason. This is a big one. This was an amazing night, an amazing day. We have a great Republican Party with tremendous talent, and we want to have unity, and we're going to have unity. And we have no choice because November 5th is right around the corner. November 5th is going to go down as the single most important day in the history of our country.
Here's the latest this morning. Nikki Haley expected to exit the race for the GOP
Germany's Finance Minister
nomination
Linda
after dominating
Handelsblatt
performance
interview
once
says
again
policies of
from the
ease
former
von der Leyen
president.
are
The Wall Street
endangering
Journal
our
first report that
competitiveness
news.
and
Bloomberg
economic
reporting
prosperity.
Haley will make remarks from Charleston, South Carolina at 10 a.m. Eastern Time. Greg Valliere of AGF Investments joins us right now. Greg, that news dropping just moments ago, hardly a surprise. Your thoughts, sir?
Yeah, I thought it was going to come this week, so it isn't not a big surprise, John. I think the big story now is, well, we want to see if she endorses Trump or not. I think she won't, or it'll be very tepid. The other big story, though, is the State of the Union address on Thursday night. I think Joe Biden really needs to hit the ball out of the park. If he stumbles, if he gets his words wrong, it would be disastrous. This is his big chance to be in front of a huge audience, and he needs to show that he still is viable as a candidate.
Trump began February with $30 million on hand. The Biden campaign north of $130 million. Yeah. With Nikki Haley dropping out, do her donors flock to the former president?
They could, Anne-Marie. I think there are two big factors that Trump has to worry about. One is money. Is he going to raid the Republican coffers for his legal fees? The other is abortion. I think it's been underemphasized. You look at what's happened in the last few months in states like Kansas, Ohio. The public thinks the Republicans are too strident on abortion. And if they don't change their tune, that could be a real albatross for Trump.
Well, we heard from Haley last night. She didn't come out and speak, but her campaign put out a statement saying that unity is not achieved by simply claiming it. This was a rebuttal to what the former president said at Mar-a-Lago. She has a point when it comes to when you look at the percentage of individuals who are still voting for her. In some states, it's 40% that she's getting the Republican primary vote. How does Trump close that gap in November?
I would guess that a Trump emissary in the next few days will go to her and say, what do you want? What can we do? And I think issues like abortion, a lot of issues for suburban moderates will be on the table. Maybe a cabinet position, although I don't see her doing that. I think that she will have a list of things that she wants.
If she doesn't endorse Donald Trump, how do you view his performance yesterday in terms of spinning forward to what his biggest challenge is going to be in the general?
Well, he hasn't really defined much, has he? I mean, I'm not sure what his position is on the Middle East, on Israel and Gaza. He hasn't said anything. So that's another opportunity for Biden, who frankly I think is actually a little underrated right now. I think Biden could go right to Trump and say, what is your prescription on Obamacare? He wants to kill Obamacare. What do you want to replace it with? There are all of these things that Trump has just talked about generally. He's going to have to get pinned down at some point.
Terry Haynes came out and sort of some of his thoughts from yesterday and said, honestly, it's not just that it's going to be a rerun of what we've seen before. We've known that. What it is that we're going to see probably a split Congress. And what we're probably going to get is no fiscal right sizing, no 2017 tax law permanence, no relief from overweening performative regulators. Do you agree that this is essentially the takeaway at a time where people are increasingly talking about all of these issues and whether we could see a shift at the White House?
Well, that's possible, and I think the markets, as we all know, like gridlock from time to time. So I don't totally rule that out. But an awful lot depends on the Senate, and we saw still another change last night with Kirsten Sinema announcing she's not going to seek re-election. And I'm not positive that the Senate will be totally inept. They might get some things done. I don't rule out the Republicans taking over the Senate.
Hey, Greg, wonderful to hear your thoughts. Greg Valliere there of AGF Investments, waiting for that address from Nikki Haley a little bit later this morning in Charleston, South Carolina. Liz Ann Saunders at Charles Schwab with us. Rama, you know how this works. Yes, I apologise to our guests because we're about to talk about politics. But I'm going to talk about markets. We had double-digit losses year-to-date on Tesla, Double-digit losses year-to-date on Apple. A piece of that puzzle is China, and a piece of that China puzzle is potentially rising nationalism in the mainland. How complicated is life going to become for multinationals, given what may happen later this year?
Well, and it's not just Tesla and Apple, but Alphabet has been dragged down. It's, 2 days ago I looked through a closing basis, and all three of those were ranked in the bottom quintile of year-to-date performance in terms of the S&P 500. So I think it really does depend. And it's not just are you a domestic company versus a multinational company. It's very much that tie to China, either from a sourcing perspective or from a customer perspective. And you guys know I don't cover individual stocks, but I think that's one of the reasons for the speed with which companies are shifting their attention, especially to places like India.
We also had ADM come out and basically say the chip that they produce to basically get around the export controls actually will not get the license to go to China. Whether or not it is Biden or Trump, I'll come back to politics. Do you think the direction of travel is the same when it comes to Beijing and Washington?
Well, the rhetoric coming out of Trump and the campaign has been even more aggressiveness on tariffs, and I think that further divides the world into the multipolar structure that seems to be underway anyway as it relates to other things, including the wars going on and to some degree the de-dollarization, not de-dollarization broadly, but some of the de-dollarization of oil and the fact that oil is being transacted in currencies other than the dollar. And I think that just adds to that story of a very different world order.
What do you think Trump trade volume 2 is? How different is it? Is it small caps, long small caps, because of the fate of multinationals, the difficulties elsewhere?
60% tariffs across the board. I think that's obviously to the detriment of smaller companies that don't have the ability to be as nimble and shift, whether it's sourcing or manufacturing. I mean, a lot of that has been underway anyway, but I wouldn't generalize and just say small caps. To use my fine-tooth comb analogy again, I think looking at individual stocks these days, you got to have that fine-tooth comb to see.
Lisa wants to know if it's short treasuries, basically. Liz Truss moment in the treasury market.
Well, this is essentially the question, right? Can the U.S. face that because it's the reserve currency to the world? And so when you talk about de-dollarization, does that give enough kind of pressure? Right, but then you say of oil, so then we're not looking at a head of lettuce and seeing whether it's going to, okay.
Lizanne, this was great. It's awesome to see you. I can't believe it's been so long.
See you guys too.
Subhadra Japa came in the studio from SocGen a couple of months ago, and she said, I haven't seen you for 4 years. And I was like, I've seen you every month for the last 4 years. It just feels so odd. Lizanne, it's great to see you. Thank you.
Thank you.
Coming up next on this program, we'll talk China. Leland Miller of China Beige-Book, as China looks to defend lofty goals for growth. That conversation just around the corner. Equity futures on the S&P 500. They are positive. We're positive 1/3 of 1%. From New York, this is Bloomberg.
think I was around so many powerful people my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and any given day it would be the head of a studio, and just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it, because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
The day really picks up a little bit later this morning. Chairman Powell, Volume 1 onto Volume 2. Onto tomorrow. Equity futures going into it. The scores look like this. Equities up 0.4% on the S&P, up 0.7% on the NASDAQ. That is a bounce back after 2 days of losses on the S&P. The biggest one-day slide going back to the middle of last month on the S&P 500. On the NASDAQ, the biggest one-day drop since the end of January. Tesla hitting discretionary. Apple hitting tech. China coming out with a growth target that hardly anyone believed in. In the bond market, yields were already a little bit lower. Lower again after we got the ISM. And I think the ISM is the real news yesterday morning, 10 a.m. Eastern time. The ISM did not confirm the January boom. Yields lower across the curve, Lisa. 456.40 this morning on a 2-year.
And yes, it was the headline disappointing, but more than that, it was the employment component, as you mentioned before, going into contractionary territory, and the prices paid component actually coming in less hot than expected. So it's basically the two-pronged approach. Maybe there's weakness under the hood, and oh yeah, maybe the inflation pop that we saw in the previous CPI and PPI was kind of a blip. That's the bond market. Let's just turn to FX and a little sprinkle of commodities too. Had a few people reach out to me yesterday saying, why aren't you talking about gold? Are you secretly buying some? So the answer is no. But gold is at an all-time high and printed another all-time high, Lisa, a little bit earlier in the session. And this really goes to this question of what is the implication for monetary policy, right? Is there this idea that they're going to be cutting rates and then you could get some more value in non-interest-bearing commodities? Is that some of the idea here? Or is it that inflation's going to pick back up? Because frankly, the Fed is going to cut rates more aggressively than perhaps the market is suggesting. I don't know. Take your pick. Maybe it's because it's a Bitcoin alternative. That's gold. I want to finish on sterling, 127.21. That currency pair is positive by 0.1%. So that's a slightly stronger pound right now against the US dollar. Later on this morning, 7:15 Eastern time. If you are in the United Kingdom, we're going to hand over programming from here in New York. We'll hand it over to London. The brilliant Francine Lacroix is going to give you a budget program at 7:15 Eastern time. Everyone outside of the UK is stuck with us. We're going to talk about everything else, including the chairman of the Federal Reserve. Under surveillance this morning, investors are waiting day one of Chair Powell's testimony on Capitol Hill. Powell begins in front of the House, where markets are expecting a less dovish message ahead of the Fed meeting later this month. The ADP employment data coming at 8:15 Eastern time, ahead of Powell's testimony at 10 o'clock. Then Chair Powell heads to the Senate tomorrow before the US payrolls report on Friday. We touched on this briefly, Lisa. Will that data confirm the boom or not? And will it give the chairman, this Federal Reserve, a little bit more space to breathe? I like that you point straight to the data and you don't talk about what Jay Powell is going to actually say, because that's how de-emphasized he feels right now to pretty much everyone who says he's going to come out, try to just say words, not really say much of anything, and then we're going to all look to the data. That ultimately is going to be the question, though. Do we see the weakness, as the ISM data seem to suggest, transpire, or do we see another 300 some print? And oh yeah, what about the revisions? No, yeah, what about hours worked? Are people working more hours, which means that essentially all those fears that companies are cutting back little bits around the edges, not to have to lay people off, is kind of, I don't know, fiction? And he's got to face down some Democrats in that room tomorrow who have written him a letter
writing a letter saying, we want rate cuts and we want them yesterday.
And they've been talking about this, Jonathan, since January. They wanted rate cuts, and they're talking about housing costs and how this is weighing on the everyday American consumer and how the Fed is behind because they should be cutting. You know, I look at what Patrick McHenry, though, Republican North Carolina, chair of the House Financial Services, he said the biggest thing before the Fed is not a quarter point this way or that way, but this larger view of capital for bigger banks. So the Democrats are going to hone in on housing costs and what's hitting everyday Americans with these rate hikes, and then Republicans are going to go to capital rules on the big banks. We pretty much know what the politicians are going to say, and I think for Jay Powell, he's just going to try to not make news.
Hey, prepare for the politics. We're going to be talking about shrinkflation, corporate price gouging, corporate greed, all of those things.
I mean,
is that coming up?
What does he say? Is he going to say, can I give you a lesson on inflation the way that I see it? You know, actually give me the next half hour and roll out some sort of PowerPoint.
I would love that.
You know, it would be, you know, just really, let me explain to you how monetary policy works, people, you know, et cetera, et cetera. Maybe we'll get that.
Shrinkflation is going to be one of the big topics, not so much today or tomorrow, but tomorrow evening, Thursday evening. Biden, I think, is really going to hone in. He did it yesterday when he was talking about credit card fees. He's going to hone in on this is the problem for big companies. Their price gouging, their shrinkflation. Yes, we know you're still feeling inflation, but it's not my fault.
Wasn't he talking about the Cookie Monster as well? Did you see that too? I'm not going to go there.
Let's
talk about the BOJ. Japan's biggest bank is preparing for the BOJ to hike rates and exit negative territory on March 19th. The call from MUFG coming as markets are still pricing in about a 50% chance of a hike. The bank's head of global markets making the bet and expecting the bank to hike yet again by October at the latest. The compare and contrast is always striking, Bramo. We're talking about cuts in America. We're still waiting for the first hike from the BOJ.
Yeah, so that they can get all the way up to 0.25% by October. That's the goal, and that's what some people are saying. In order to do that, you got to start now because it's really going to be a tough slog to get there. So that's essentially the argument here. They're in a world of their own. What I think has been taken off the table is the tail risk that they're going to do this somehow rapidly because that doesn't happen over with the Bank of Japan. And either way, it doesn't seem like markets are expecting or girding for any kind of extreme action.
I know you know this, but let's snark. This is a multi-decade effort. I know you know this, but I do think this is an important moment for Japanese authorities.
I think it's an incredibly important moment, and I think it explains why people have the confidence to go into Japanese equities. I think it's important to frame just how ludicrous it is that we're talking about raising rates from negative to not negative, right? This is what we're talking about. But taking a step back, this is an amazing and pivotal moment that I think a lot of people are recognizing with new dynamism in a country that was left behind and really had a lot of forgotten decades.
I mean, I'm with you, and I'm the worst for snark anyway, so we'll park that there. You know, I know. China pushing back on doubt. Amid skepticism, the country saying its 5% growth target is attainable through, quote, vigorous effort. That's according to a top Chinese official speaking on the sidelines of the National People's Congress. China Beigebook CEO Leland Miller calling the number useless, saying this: 5% is a completely useless number for markets to toil with, largely because hitting it is almost totally incompatible with what else they're promising to do, all of which pushes against the notion that they will prioritize much stronger growth. The government's GDP growth target of 5% makes us dumber on China, not more informed. Leland, I'm pleased to say, is with us right now. Leland, let's get straight to it. I think the obvious question, and the one you can help us with, I hope, what is the purpose of a GDP target in Xi's China?
There used to be a purpose, which was setting a goal for output, and then the government would, juice the economy. It would grow the economy, then juice the economy to hit that target. The GDP target no longer has a real purpose anymore. It's just a relic that they are having a hard time getting away from. I think the reality behind the scenes is that they are envisioning a world, as we've been talking about for the past 10 years on your show, that is going to go from 6 to 5 to 4 to 3 to probably to 2 and 1, very low levels of growth. They can't articulate this. They don't know what to do with that. That doesn't mean they're going to change their economic plans. They are gearing for a slower, hopefully healthier economy going forward, but they don't know how to articulate that, and they don't know what the signal is to send to foreign investors. So they put out this ridiculous number that is totally incompatible with everything else they're saying, and they say, just here it is. Make of this what you want. We don't really care anymore.
Leland, some people are saying that it indicates some sort of panic or some sort of desperation or some sort of frustration on the part of the People's Congress of China. Do you agree with those types of assessments?
No, I think it's the exact opposite. I think the major problem that foreign analysts are having right now is that they misunderstand. They see what's going on. They're like, oh, she must be panicking. He must be approaching his pain threshold. Why doesn't he do more? The lesson here is they don't think things are all that bad. Yes, the economy didn't recover great last year. Yes, growth is no longer going to be anywhere near the the old targets. Yes, they're not going to use the old stimulus playbook. They don't want to. Their focus is elsewhere. So the real problem that markets have to get around to on China is understanding that we're in a new paradigm. The leadership's economic priorities are completely different, and they are not all that disappointed with the level of growth right now and with the level of economic activity. They want to avoid a doom loop of confidence. They don't want the bottom to fall out, but they're not concerned about the levels of growth.
Which raises a question of how much they actually want international involvement in their economy. We talked about yesterday Apple and Tesla and some of the disappointing deliveries during the beginning of the year, and we were wondering, is this because of domestic pushes to buy more domestic rather than in the U.S., or is this just real weakness among a consumer base that's really faced a lot of struggles in China?
Probably both, but a lot of it is the former. This is yet more policy incoherence. They have a message that they're welcoming foreign investment, but at the same time they're cracking down on foreign firms. They're very explicitly saying we need to rely less on foreign supply chains and on foreign inputs. So let's build more ourselves domestically. So it's just an incoherence in the message, and I think you combine that with a weak economy, and everyone's scratching their head. What's happening? What's happening? But if you listen to what they've been saying for several years now, it's very clear what's going on. Yes, you have a weak economy, but they're also trying to be less reliant on U.S. goods, and they're trying to minimize, the impact of Apple and others in their economy.
You say the biggest mistake China watchers make is that she is panicking. You say this is not at all what it is, but if she was to be panicking, what would we see then?
I think at some point you have a situation where the economy falls apart, and you expect bigger stimulus. If you look at what happened in the stock market, they got to the point where they don't really care what happens in the stock market, but they also don't want the stock market to fall so precipitously that it creates this doom loop and it affects in a big way the wider economy, which is normally uncorrelated with the stock market. So I think they'll step in order to set a floor. If they ever thought they went into real panic and they thought things were a true mess and they had a real capital outflow crisis, then I think you'd see more louder, hard-hitting support, but we're nowhere near there right now. I think that's the important takeaway.
Leonard, I just want to probe a few pieces of some of the things you've said. You've talked about them being comfortable with the current growth trajectory, yet at the same time in the last year, they suspended reporting youth unemployment. You talk about that comfort with the equity market, at the same time going into the big holiday over in China. They were banning net selling at the start of the session and at the end of the session. Is that incompatible with your views?
No, it just shows there's more incoherence. I mean, net selling is banned not just in China, but anywhere when markets get panicky. And so this was one of the times the market kept falling and falling. They brought the national team in for the stock market. It kept falling. They said, okay, we got to do a little bit more, because if the bottom falls out, then we've got a real problem and people may think the economy is falling apart. So they stepped in with bigger measures to boost confidence in the stock market. But I think, again, the rule of the day is they want to do just enough to keep things going. They're not trying to juice things. They don't care about investor returns. They don't want to return to high levels of growth or even medium levels of growth. They want to continue to restructure the economy, minimize external reliance, build up a domestic chip ecosystem, focus on national security priorities, all these things that are really important to Xi now. They're not worried about the old priorities, and they're just trying to muddle through as best they can without having the floor fall out. And that's the level of support we're going to see going forward.
What you're saying paints a pretty bleak picture, in my view, for certainly an international investor. No big stimulus coming, no real emphasis on growth, and not a clear message in terms of what they really want with international investors. So from a U.S. perspective, is China uninvestable?
No, we get this all the time. I don't think it's uninvestable per se, but I think that the old days of investing in the stock market, closing your eyes and just sort of checking back every quarter as you cashed out your dividends on the big tech giants, those days are obviously over. If you have a line of business that can operate in China, it is compatible with the government's goals, and they need your expertise, or they need your company, then you could do okay in China fine going forward. There's a lot of companies that still do, but generally speaking, the lure of China was this idea that there's, you know, 1 billion plus consumers, and that if you sell anything in China, you're going to make a lot of money. That was never true. It was always sold as sort of a marketing theme, and now it's clearly blown apart, that entire thesis. So, got to be very, very careful if you're investing in China right now.
So well said, Leland. You're one of the absolute best at this, and we appreciate your time this morning. Thank you, sir. Leland Miller of the China Beige Book. Speaking of a trade, we're up by more than 12% from the lows of early February on a CSI 300. If I was in that trade and I was listening to that, I feel a little bit more uncomfortable after that conversation.
Because a trade means you've got to have an eye on the exit. And what he's just saying is, if there's no bazooka coming, what's the next catalyst for some sort of upside swing?
Stocks here stateside doing okay. Let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Goldman Sachs is zeroing in on the Middle East, Europe, and Africa as it builds out its private banking operations for the world's wealthy. A senior executive at Goldman says the bank recently hired at least 6 private wealth advisors in the region from rivals, including JP Morgan Chase, Credit Suisse, and Rothschild & Company. Goldman Sachs plans to keep looking outside the company for more advisors. Nordstrom lower in the pre-market by about 10%, forecasting muted revenue and comparable sales growth at its high-end stores. Nordstrom sees revenue for the fiscal year between -1% to 2%, and it's planning further investment in its digital strategy and its discount rack stores, which has an improving outlook that outpaced expectations. Senator Bob Menendez has been indicted again in connection with an ongoing bribery case. Federal prosecutors added obstruction of justice charges to existing criminal counts against Menendez and his wife. Many Democrats have called on the New Jersey senator to step down after he was initially indicted last September. Meanwhile, independent Arizona Senator Kristen Sinema has announced she won't run for a second term. Her decision ends the possibility of a turbulent race in one of the nation's most politically competitive states. That's your Bloomberg Brief, John.
Danny, thank you. Big market day. Every single time I've done a market check so far this morning, Lisa's been laughing at me every time I've said biggest one-day loss since middle of February because we're down only 1%. Here's the stat from Allegra Catelli here at Bloomberg. We've not had a 2% drop or more in a single day since February 2023, the longest run without such a pullback in 6 years.
Yesterday, when I was looking at the returns after the close, I thought to myself, is this a dip? Because it's going to be viable. Does it count as a dip? And what we're learning this morning is, yep, it is.
That's why 1% pullback is drama, Bramo, these days.
Ah, such drama. Love it.
Stocks are better today, up a third of 1%. Up next on the program, Chair Powell on Capitol Hill.
If they cut, there's going to be complaints, and if they don't cut, there's going to be complaints. If they don't go by June, it's going to be a lot harder for them to start cutting.
That conversation up next, live from New York City. This is Bloomberg.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words and then you put a few sentences together, and one day, you might be able to write poetry.
Next time on The Deal.
I realized a long time ago that being a football player or an athlete, you can get into a room, but once you get in the room, you have to prove that you belong there. But what keeps you in the room, right? It's your talent. It's the talent that a lot of people don't see or don't think you have because they've only seen you in one way. And for me, the biggest pivot was getting out of my own way, telling myself that I'm more than just a football player.
Next. It was going to keep Green World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Live from New York City. We won't go there. I'm not even going to tell you what Carl's talking about. We'll get to Carl in a moment, though, on the Fed chair.
I got the finger.
On Fed chair Jay Powell.
The forefinger.
Not who he thinks might be the Fed chair in the future. Equity futures right now on the S&P positive by 1/3%. It's not Bramo or me or Anne-Marie or TK for that matter. Yields higher by a single basis point on a 10-year, 4.16. Under surveillance this morning, Chair Powell on Capitol Hill.
So there definitely is a political, I think, a part of this, and that's one of the reasons why Jay Powell sort of, I think, laid the groundwork for cuts way back in December. But as you know, if they cut, there's going to be complaints, and if they don't cut, there's going to be complaints. If they don't go by June, it's going to be a lot harder for them to start cutting.
Here's the latest this morning. Fed Chair Jay Powell facing Congress for round one on Capitol Hill. This ahead of Friday's jobs report. Carl Riccadonna of BNP Paribas expecting payrolls to rise by 220,000 due to, quote, an underlying acceleration and broadening out of job growth in the more cyclical sectors. The median estimate in our survey here at Bloomberg calling for a print of 200K. Carl, I'm pleased to say, is with us around a table in New York. Carl, good morning to you.
Good morning.
Let's start with Powell, then we get to payrolls, because
sure.
I find that cyclical broadening out fascinating.
Sure.
What are you expecting to hear from him with that in mind?
Well, we have to remember when Powell is testifying on Capitol Hill at these semi-annual events, he's speaking on behalf of the broader committee, so it's not his opinion that necessarily he could express in the press conference. It is him testifying on behalf of the broader committee. And I think that, we've been in an exceptional period recently where everyone is singing out of the same hymnal at the Fed. The Waller speech, "What's the rush?" I think is the best summary of kind of what the Fed is thinking. And everyone is saying there's no hurry to start moving, but it does seem appropriate to start moving sometime relatively soon. Maybe not with an aggressive cutting campaign. This is not the economy rolling into recession, but a more gradual recalibration of policy. If I could just put one point around that.
Of course.
Right. Last week, we saw the PCE deflator data. Headline PCE deflator, which is the Fed's target, has gone from above 7 to now rounding to 2. So we're not at 2. We can't say mission accomplished, but we are getting much closer to target, which means that the monetary policy prescription that was in place at 7 is not appropriate when you're basically rounding towards your target. And so a recalibration is appropriate at some point.
I'm itching to get to payrolls, you know that, so let's talk about it. End of last year, this is how people talked about the jobs market in America. Payrolls growth was okay, but it was coming from fewer and fewer industries. We were talking about narrowing breadth. Now you're talking about the broadening of job growth in the more cyclical sectors. Where is that change coming from?
So the change is coming from a very interesting point, which is the collective improvement of animal spirits in the economy. So this is, we try to put a price tag on fiscal stimulus or Fed action or whatnot. If collectively we step back from where we are, let's say Thanksgiving weekend of last year, where 10-year treasuries were flirting with 5%, stocks have a negative tone, and people are still very much in the recession camp and concerned about consumers, student loan payments, et cetera. If we step back from that and everyone says, wait a minute, maybe recession risks are materially lower and we're too conservative in our expectations and plans for CapEx spending, business fixed investment, and also headcount for 2024, all of a sudden that collective improvement in mood can have a very powerful consequence. And we can see that in those more cyclical sectors, going from net job loss in October, a little positive in November, more positive in December, much better in January. There seems to be an improvement in CEO, CFO, hiring manager sentiment, which is contributing to this kind of cyclical reacceleration in the pace of job growth and also improving forecast for economic growth in 2024.
I can hear the voices in my head, not all of them, but the ones that are saying.
We are live, Bramo.
The ones that are saying.
Let's break this down. What are they telling you?
The ones that are saying.
Dr. Carl wants a chat.
But what about hours worked? I'm just going to keep going. Hours worked going down because people don't want to get rid of labor and they want to keep it in play. What about what we got from ISM Services yesterday? Doesn't that indicate some sort of softening?
ISM Services are still in expansionary territory, so it tells you things are okay. I think if we look at the manufacturing ISM, more broadly, not focusing on one single month, we can see that there's a bit of an inventory cycle starting to improve, and broader broader kind of demand improvement in the economy, where I think the manufacturing sector will look better in 2024 than it did in 2023. And so you see some sense of improving momentum. You can even see it in kind of the tracking forecasts for economic growth, that the consensus forecasts are tracking to a faster pace of growth. Not to say the economy is going to grow faster this year relative to last year, but there are elements of this improvement.
We've buried the lead. You've changed your view. You came out overnight, you came out in your latest report basically saying you've pushed back your expectations for the first rate cut, drum roll, to June from May, and that you actually think that the Fed's going to cut less this year, now 100 basis points versus 150 basis points prior.
Right.
How big of a shift is this? Does this matter from an economic perspective in terms of a steeper drop-off later on, or is this basically just the new normal?
This is a very different kind of economic cycle where it looks like recession risks have faded. Now, you can never say it's zero. There's always some element of some unknown event that could disrupt the economy, and so there has to be some kind of lower level of recession assessment. But going from 6 to 4 cuts, I think, is more of the kind of Fed's reaction function to what we're seeing in the data. You mentioned the hours worked being down. I think there was a big disruption in January, which I hate to be the economist playing weatherman, but in January and February, you get to put that hat on occasionally. We can see that there were weather disruptions in the labor data in January, and so I think hours worked, the length of the work week, those sorts of things will spring back when we see the Friday jobs number. But this is a very different Fed cycle because it's a recalibration of policy. So if we're looking for a parallel, 94 with Alan Greenspan is kind of the best example where, okay, inflation's coming down, there's some sort of productivity improvement happening in the economy. We don't know in real time the full extent of that, but we can see that it's improving. There seems to be a labor supply shock that really boosted the economy last year in the back half and probably is carrying over to some degree into the first part of this year. And so the Fed has the luxury of moving slowly, but nonetheless, as I highlighted to John, the inflation numbers have improved materially, so you can start recalibrating policy to ensure that you have a soft landing for the economy.
30 seconds left, so super tight if you can. It's a challenge for you, I know, Carl. Let's finish on this. There was a comment from Chairman Powell at the end of January when he said, we don't look at strong growth as a problem. That predated a jobs report. Is he still saying that now?
I think he is still saying that because there's evidence of this labor supply shock. There's some sort of supply shock in the economy, and when we start pulling back the layers of the onion, it seems to be a labor supply shock. And so if you're, he is a product of the 1980s. The 1980s was, supply side economics, and because of these dynamics, right, where you had very strong growth in the back half of last year, but you had inflation coming down. That's the fingerprints of a supply shock. And so in that type of environment, you can maybe not ignore, but dial back your concern about above-trend growth and just focus on inflation doing what it needs to do, which, January aside, it has been doing that.
That was about 30. Carl, it's good to see you. Great to catch up, buddy. Great to catch up, as always. Carl Recordano there of BNP Paribas, looking ahead to Fed Chair Jay Powell, Volume 1. You okay, Bramo?
I'm great.
What are they saying to you?
They're saying,
sell stocks, short credit, Liz Truss in the Treasury market.
Lettuce.
Something like that. Eric Friedman of US Bank Asset Management up next. Bloomberg's Michael Shepard joining us too. Kelsey Barrow of JP Morgan Asset Management. All of that in the next hour.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Just less than 3 minutes away until we do expect the US NBA mortgage applications and NBA 30-year mortgage rate. Mortgage applications on the prior -5.6% and the 30-year mortgage rate on the prior 7.04%.
Needs to
be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
And what we do is we create these miracles that fit in the palm of your hand, these little medicines that can transform a human being's life.
Just less than a minute away now, I will be leading with the mortgage applications figure.
The latest from China's annual National People's Congress, including China's budget plans, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg. Context changes everything. It's Jobs Day, and Bloomberg has the report under surveillance.
We've had unemployment sat at 4% for 2 consecutive years.
This is a two-sided sword.
There is a softening in labor demand.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
This is a very strong labor market.
The White House has got to love this.
This is something huge they want to run on.
Where is the slowdown?
If you look at the reality, it ain't showing that.
The February Jobs Report, Friday on Bloomberg.
10 seconds. Nine spot 7%, 9 spot 7%, and the 30-year mortgage rate coming in at 7 spot 02%. That's 7 spot 02%.
Positive catalysts to potentially keep the market going.
The economic excitement that's coming out, I think, is another reason to get excited about stocks now. It's really the earnings that we expect to do the heavy lifting.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
I'm not sure what's happening. Nouria Rabini is constructive. Lisa's hearing bullish voices. It's all going down from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance. Your equity market's doing okay, up 1/3% on the S&P 500 following yesterday's losses. It's all about Chairman Powell in front of the House a little bit later on this morning. Then Lisa, onto the Senate tomorrow.
And will he be able to say anything at all that's new? Because we've heard from a lot of the Fed members repeatedly. And so there's really a question of, is it really going to be about him? You asked a question earlier this morning, and I thought it was a fascinating one. Are we seeing monetary policy and the Federal Reserve seriously de-emphasized in a market that's moving on and not necessarily seeing risk appetite tied so closely to Fed policy?
Purely from an observational point of view. From my perspective, just look at the price action so far this year. We've priced out so many cuts. We've pushed back the timing, reduced the magnitude. Equity markets still ripped, still rallied, and still done okay, even when the likes of Apple has been terrible. The likes of Tesla has been even worse. And Google, we know their struggles. They continue to struggle.
The why of this is fascinating to me because so many guests have come on and not given the same answer to the why, which is the reason why I hear voices, but it's also the reason why I thought that Jim Caron at Morgan Stanley was so interesting when he came out yesterday and said fiscal policy is more important than monetary policy right now, and that fiscal policy is the driver of a lot of the reason why people have spending cash, of why companies are still chugging along and will be supportive going into the election. That, I think, is an increasing tone that I'm hearing during a week of an incredible amount of economic but also political news.
So you'll get the view on the economy from Chairman Powell a little bit later this morning. Then tomorrow evening at about 8 p.m. Eastern Time, you'll hear from the President of the United States in the State of the Union address. And now, if he didn't know before, he now knows for sure. He's going to be facing off Donald Trump because all of the reports from the media organisation stateside this morning, AMH suggesting Nikki Haley is heading to that exit.
Yep, she's out, and at 10 a.m. she's going to announce it herself in her home state. I mean, it was a long shot bid anyway, given the fact that she was running against basically a quasi-incumbent. The next question, of course, if we were just constantly asking when is she going to drop out, the next question is she going to endorse the former president? Former president wants to get a handle on some of those donors that's been backing her, because this is where he has a huge disadvantage to President Joe Biden.
Yeah, you're on top of it. It's money. Fundraising. Biden's absolutely dominated the fundraising. Nikki Haley's been attracting a lot of financial support over the last few months. I think it begs the question. She heads to the exit. Does he get the money now, or does that money stay on the sidelines?
It's a great question, because when you saw some big donors, some fiscal conservatives, individuals who say we are never Trump, but we are staunchly conservatives, back out. They say they still want Nikki Haley to succeed, but they're not going to push their money there. So they're putting their money down the ballot. I think a lot of it depends who Trump picks as his VP. Can any of these big donors get behind a vice presidential candidate they like? But just to remind you of these numbers, Trump began February $30 million. Biden, $130 million. It is a massive war chest that this campaign is going to be put to use in 7 key swing states.
We're going to be parsing through all of the details of this for the next however many months, which I'm sure everyone's super excited about. But what I find fascinating is what Terry Haynes said in terms of the takeaways from yesterday, which is that you're probably going to get a split Congress, and you're going to get no fiscal right sizing, no 2017 tax law permanence, and no relief from what he calls overweighting performative regulators. What does this mean in terms of what we get with mergers and acquisitions, what we get for a potential premium in the debt markets, and for potential tax overhangs that people are looking for? Honestly, that is what I'm focused on at a time where we're trying to shift to, okay, well, what's the trade here?
You're only focused on the second point. I know you are. And you've been talking about it, and you're right too, and we're going to continue talking about it, by the way. The prospect of having a repeat of what happened in the UK, that you have a leader that comes into power that has some lofty goals about producing economic growth at a time when maybe we don't need it.
Well, and if you can't get tax law permanence to that point, you can't have that offset to some of the proposals with respect to tariffs, with respect to some of the spending. That's the rub. And that's where you start to get maybe a question of a bond market rebelling. But everyone's been writing in to tell me that I'm ridiculous with Liz Truss, because it's completely different, and the U.S. is the reserve currency to the world, and I understand and recognize that. Thank you.
They have the privilege of behaving recklessly for now, but that can always change. Brammer, we'll keep asking, okay, just for you.
Thank you.
Equities right now on the S&P positive a third of 1%, a massive day ahead stateside for financial markets worldwide. It starts with Chairman Powell later on this morning, carries on tomorrow, then goes into payrolls on Friday. Stocks are doing okay, yields are a little bit higher, up by almost a basis point, 415.84 on a US 10-year. Coming up this hour, Eric Friedman of US Bank Asset Management, with big tech pulling stocks lower, Bloomberg's Michael Shepard as Nikki Haley exits the GOP race, and Kelsey Barrow of JP Morgan with Fed Chair Jay Powell's testimony a few hours away. We begin with our top story, a trio of tech heavyweights hitting turbulence and raising big questions about tech valuations. Eric Friedman of US Bank Asset Management writing this: we do not view domestic dynamics as bubbly. We see this as constrained supply meeting more stage demand. As prospective AI buyers evaluate applications for their businesses, we continue to let winners run and favor domestic equities over international. Eric's with us around a table in New York. Eric, good to see you.
Great to be here, John.
Before we get to domestic versus international, I want to talk about letting winners run. What winners? Which ones? The ones from last year or the ones that continue to run this year?
Yeah, I think the ones from last year. And so far, if you look at the broadening out, it's been more muted in terms of that broadening out effect. But certainly we are seeing more than just tech and consumer discretionary work well. So that's certainly a positive. But our viewpoint is that the AI phase is not really let's call it a bubblicious environment. Again, maybe it's tainted somewhat from my time in San Francisco during the 99-2000 run-up. But this is a matter of companies wanting to get involved, but just not really having the access that they need. So again, we think that tech is still a momentum play, but one that we would still be involved with.
Others agree with you. Bank of America say there's little sign of euphoria. I think Goldman Sachs said tech valuations were backed by fundamentals, but within the Mag 7, we're seeing it break down. We saw two of them yesterday really struggle, the likes of Tesla, the likes of Apple as well. What do you make of that leadership shift within the Mag 7 itself?
Yeah, I think it's important to gauge, and I think if anything, it's positive there is some differentiation. And in terms of what we're really gauging, if you will, on the forward view is what happens with AI spend. So cyber and AI spend are things that we track pretty significantly in terms of our bottoms-up research, and it's still there. There's obviously a backlog. You're seeing a increased flare out, if you will, of other chip companies getting involved. And so that for us is a positive. So I think if you start to see again that sort of lights on, lights off, everything is up, everything is down at the same time, that would be more negative. The fact that there is some more differentiation is at least from our perspective, a mild positive.
Is the differentiation with respect to artificial intelligence revenue streams, or is it largely due to China and just how much exposure some of these companies have?
Yeah, I think that's key, Lisa. If you look at the Chinese story in particular, right now, if you look at the data that we're actually getting, it's actually more muted, not just the fundamentals, but also the breadth of data you get. So looking at individual companies, that's become a much more important part of our data process. Less either private surveys or even official Chinese surveys. So that feed through has been important, and certainly there's a slowdown. We do think that China runs the risk of throwing the old playbook at the problem. We've been underweight, which has been beneficial for the last couple of months, but certainly the last 6 weeks it's been a bit more challenging. So,
is there a message in this that you can spin forward? John's been talking about multinationals and how in general there's sort of a struggle, especially if you count on international revenues from the likes of China. Are you playing that theme through other sectors other than just the big tech behemoths?
Yeah, we are. I think if you look at a couple of subsectors where it's been really important, one has been global retail. And if you look at some of the value add, if you will, from even the European retailers and also some of the larger domestic ones, we of course have had a lot of earnings in the last couple of weeks, and we have more to follow. But I think that the read-through, if you will, is that the consumer is now looking for value. And that to us is maybe some indication that there's a differentiation across middle income as well as lower income consumers. So the fact you're starting to see maybe those aspirational buyers step back a bit, not just get into brands that they want to get into persistently, but also brands that maybe they're priced out of. That suggests there's maybe a little bit of a slowdown for lower income consumers, which could be a bit of a tell for our macro view.
When it comes to China, there's been a lot of talk as these are trades, not investments. Is there anything that China could do that would change your mind on being underweight?
Yeah, and Maria, I think it's something where structurally speaking, the property market holds the key, and that is such a structural issue for them that's tough to overcome. I do think the export push is something that we can't discount as being immaterial. So one would be a massive export push. The other would be perhaps a bit more mobility by Chinese consumers. Again, passport penetration in China is something like 5 or 6%. It's tiny, and the fact that there is more of that push for experiences versus stuff, that could lead to maybe some positive outgrowth from China, but we're really not seeing that materialize quite yet.
Lisa raised this question. Let's talk about fixed income and the repricing of Fed rate cuts. How have we done this with the equity market still close to all-time highs? What's your explanation for it?
Yeah, it's been one where, if anything, the Fed has said, market, you have to flinch because we're not going to. And that flinch process has been, in some cases, gradual. But in some cases, if you also look at the tone, I think Lisa's been all over this. If you look at the mix of the auctions, which we're paying very close attention to, I know that your colleague Tom Keene is not as interested, but we're very interested. And
You're welcome back anytime.
Yeah, exactly. So, we've seen something like 41-42% of foreign participation drop down to 28-29, and in some auctions it's been south of 10-11%. So that says to us that this bond repricing is happening really from a mix of more price indiscriminate buyers. Think about pension funds, banks, and central banks. They tend not to be so price sensitive. But if you now look at who's buying bonds, these are asset managers like us that are very, very price sensitive. So in a way, you've had this shift, if you will, away from the almost indiscriminate buying and more into, the fiscal house, if you will, is more important to foreign buyers, and price discrimination is more key.
Is the fiscal house already being priced into the Treasury market, or is this something where there could be a more significant kind of shock at one of these auctions that I do follow and care very much about?
Yeah, I think it's probably second or third inning priced in, Lisa. I think if anything, there's so much noise happening with the Fed. When does the Fed start cuts? Will they cut 2 times, 3 times, what have you? This is probably a late 2024, early 2025 story. Once we get past election, once we get past through some of this Fed noise, really paying attention to not just treasuries, but also the TIPS auctions. Those we think are areas that could be more of a focus for investors. So we're paying very close attention to it.
Eric, true story. This is about timing and not content. Auctions are in the afternoon, and TK naps in the afternoon. That's why Tom will always say he doesn't care about a couple of things, right?
True.
Auctions,
yeah.
Fed minutes.
Yep.
Okay, if he wasn't on air, he wouldn't be watching the news console with Chairman Powell.
Correct.
All of those things. Anything after midday, between midday and the close, he doesn't care about.
I kind of get it, though. I mean, I was just saying, I find my lull. But, I still pay attention because it's that riveting. I'm tired, but I still care.
It's gripping stuff. Eric, you're going to stick with us. Eric Friedman. Equity markets right now, futures positive. Actually, almost session highs up by 0.4%. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Morgan Stanley has laid off about 9% of its asset management unit in China. That according to Reuters. The headcount reductions are said to have started in December and impact about 15 employees. China's economy has been facing multiple headwinds, from an enduring real estate slump to geopolitical tensions, placing pressure on markets and its $3.8 trillion fund sector. Republican presidential candidate Nikki Haley is set to end her campaign after a poor showing in a string of primary contests, setting up a rematch of the 2020 election in November. Haley is due to speak in her home state of South Carolina at 10 a.m. Eastern. Former President Donald Trump swept Super Tuesday, winning all races except Vermont. Acne products from brands including Proactive, Target's Up and Up, and Clinique have been found to contain high levels of a chemical linked to cancer. Independent testing lab Valisure has asked the U.S. Food and Drug Administration to issue a recall for affected treatments. All contain the active ingredient benzoyl peroxide, which the lab says can break down and form benzene, a known carcinogen. That's your Bloomberg Brief. John.
Danny, thank you. Up next on the program, a Trump-Biden rematch, all but certain.
They call it Super Tuesday for a reason. This is a big one. This was an amazing night, an amazing day.
That conversation up next, live from New York City. This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure. Don't miss Bloomberg's interview with the
Equity markets near session highs on the S&P 500, up here by 0.4%. Yields going nowhere. 10-year 4.15.64. Under surveillance this morning, a Trump-Biden rematch, all but certain.
They call it Super Tuesday for a reason. This is a big one. This was an amazing night, an amazing day. We have a great Republican Party with tremendous talent, and we want to have unity, and we're going to have unity. And we have no choice, because November 5th is right around the corner. November 5th is going to go down as the single most important day in the history of our country.
Here's the latest this morning. Nikki Haley expected to exit the race for the GOP nomination after a dominating performance from the former president yesterday. Haley will speak from South Carolina at 10 a.m. Eastern Time. The current president facing mounting divisions and a growing number of uncommitted voters on Super Tuesday, just before a crucial State of the Union address tomorrow. Bloomberg's Michael Shepard joins us now from Washington. Shep, Nikki Haley, what next?
Well, that's the question of the hour, really. We've confirmed that she will be pulling out of the race.
but how she does it and what message she sends as she makes this announcement to her supporters, to voters across the country, and also to donors will be very interesting to watch. We've confirmed that she is not expected to endorse Donald Trump, her rival for the nomination, as she pulls out of the race, which is an interesting tell. We were seeing signals that she might hold off on an endorsement or withhold one altogether on Sunday. During remarks on some of the Sunday shows, she indicated a reluctance to do so. And that's no surprise in a way, because through this campaign, we've seen increased distance between Haley, who served under Trump as U.S. ambassador to the UN, and the former president. They are just so different in so many ways. Trump is the iconoclast, and Haley has been trying to run a much more establishment Republican type campaign, one that's far less of the America first, far less of the isolationist, and one that is trying to hew a little bit more closely to, as I said, the earlier brand of Republican politics.
Shep, is there room in a Trump 2.0 administration for an establishment voice like Nikki Haley?
I think there are some people in the Republican Party who would like to see room for someone like Haley, and for others for that matter, but it is hard to see. The numbers show it in terms of delegates. When you look at Trump, he has 995 delegates to Haley's 89 to the convention coming up. Trump is
So taking a look at the market wrap now for the European session, stocks rebounded after a two-day sell-off as investors waited to see if Federal Reserve Chair Jerome Powell would continue to oppose the notion of rapid interest rate cuts. Contracts on the NASDAQ 100 increased by 0.7%, while the S&P 500 rose 0.4%. Cryptocurrency-linked equities surged, boosted by a comeback in Bitcoin, and Tesla recovered after falling more than 10% in the first 2 days of the week. Europe's stock 600 climbed 0.2%, aided by China's commitment to take aggressive measures to keep its economy booming. Britain's domestically oriented FTSE 250 benchmark increased 0.8% ahead of the spring budget, which is expected to include a reduction in national insurance payroll tax. Later, Powell's semi-annual testimony before Congress will be the focus of attention. Given recent strong economic data, he is largely expected to emphasize that the U.S. Central Bank does not see an urgent need for rate cuts.
For him in November. Some of the voters that we talked to when we were out in Iowa and in New Hampshire for some of the earliest nominating contests, the Haley supporters, a few of them indicated to us just randomly that, hey, if it came down to a Trump-Biden rematch, they might cross party lines and vote for Biden. Now, that's unscientific. You know, we would have to do a fresh survey to see how that would break down. But really, the challenge for Trump is reaching out to people who opted for Haley because they didn't like his message and what he was trying to sell to them.
Let's talk about Joe Biden's campaign. He obviously swept last night, but Minnesota, about 20% came out and voted uncommitted, and they were less organized than, say, that group was in Michigan. What does he need to say on Thursday to shore up parts of his base?
Well, Joe Biden has a lot more to do on Thursday night than just shore up parts of the base. It really is a broad message. He is trailing Trump right now in a head-to-head rematch. And in our own Bloomberg News Morning Consult poll, we show the president trailing Trump 43% to 48% among voters if it came down to an election being held today between the two men. Specifically to your question, what do Michigan and Minnesota last night say about Biden's vulnerability? Specifically, that refers to the Mideast. And Biden is going to have to really thread the needle on Gaza.
So at 7:30 a.m. Eastern Time, we do see the Chancellor of the Exchequer, Jeremy Hunt, presenting the spring budget at the statement to Parliament.
And they really want him to do more to ensure that there's an immediate but also a lasting ceasefire for humanitarian reasons. And if he is unable to satisfy that, it risks turning voters away in November simply because they don't have confidence in him on this particular issue. And in a closely contested state like Michigan or even Minnesota, you could see the president really in a tight spot if he loses those voters.
Hey, Shep, wonderful to catch up with you, sir. over in Washington, D.C. If you are just joining us, a dominating evening for the former President, Donald Trump. And Nikki Haley set to head to the exit, 10 a.m. Eastern Time. Speaking from her home state of South Carolina, we're expecting that announcement a little bit later this morning. Eric Friedman with us here in New York City. Eric, I want to talk about the Treasury market. It's what Lisa's talking about. It's what we touched on briefly already. We've got two candidates, and I'm not sure if either one wins, they're going to tackle the nation's debt. Are you sure?
No, we don't think it's going to be politically popular for either party. It's probably like out two terms, Jonathan, before this gets addressed. Probably the most important factor we're paying attention to with the upcoming election is number one, trade policy, and then number two, what happens with the regulatory. And so trade policy, look, the sneaky risk in markets right now is that we do see a Treasury yield that just hangs around like your in-laws post-Thanksgiving. It just kind of remains elevated. Again, I love my in-laws. I shouldn't say bad things, but...
good correction there.
Yeah, well done, especially close to Mother's Day. Yeah, exactly. So ultimately, the idea is that, look, this overall level of rates has acted like a ramp on a treadmill. And this economy just can't stand Fed funds at 5.33% in perpetuity. So if we see a trade policy which is more, let's call it, shifts from isolationism to something even more significant, that to us would be inflationary in nature. And so the Fed, Treasury does not want to see that happen, I think, at a bigger scale, because we can't just keep funding, again, deficits at increasing rates.
People have been so hopeful that we're not going to get a Trump-Biden matchup, which is essentially what we're getting, that they haven't focused on policy of each of these different candidates. What do you think could be the most market-moving aspect of the State of the Union from Joe Biden, considering that we haven't really heard what his trade policy is going to look like in a second term, what his fiscal policy is going to look like?
Yeah, I think number one, Lisa, would still be trade policy. And I don't just want to harp on that for redundancy, but do think that, look, President Biden had the opportunity to redact Trump-era tariffs, didn't do that, has had the opportunity to look at some of the micro-industries we pay attention to. That just has not been a central thrust. So for us, trade policy would be number one. Number two would be fiscal policy. And I think that you've been right to cover this on this program very consistently. The idea that we have this lagged impact on fiscal. It is a steady drumbeat, if you will. It actually has been a tailwind for us in terms of being more macro positive, but it's not going to last indefinitely. So I think that number one would be trade policy, number two would be fiscal, and also the idea of, look, what measures are they willing to tackle from a fiscal perspective without...
So just a reminder, at the bottom of the hour, expected to hear from UK Chancellor Hunt delivering the spring budget. You had a note from Citi last week. They said that the national insurance contributions will be the most important. Increases in public spending are unlikely. And this may factor into the Bank of England rate cut timing for gilts. The immediate focus is on remit, and their strategists expect the remit to be split as shorts 35%, mediums 32%, longs 18%, blinkers 10%, and unallocated 5%.
Just in case.
It's fine. It's early.
Exactly.
We've sorted that out.
He's like, I'll pass.
Eric, thank you, mate. Eric Friedman there of US Bank Asset Management. Lisa, I think you nailed it. We've just been knee-deep into personalities, and I think for a lot of people in this country, and it shows up in the polling, this is not the trade-off, the face-off they wanted again. So we haven't focused on the policy. I think still now, even though we know it's going to be Biden versus Trump again, I don't think Wall Street is ready to focus on the policy just yet.
We've heard from a number of people, we know what you're going to get. Do we? I mean, that's really the key question. Then we hear from other people, well, is it going to be the same kind of thing, or do they double down on certain proposals that they couldn't get through the first term? We don't know the answer to that, but to me, this is what's going to be arguably more market moving than a lot of other things at a time where fiscal support has really been the tailwind driving a lot of this.
Big time. Coming up next on this program, we'll catch up with Bloomberg's Craig Trudell on Tesla's tough start to the year, losing more than a quarter of its market cap in a little more than 2 months.
Also,
ahead of Hunt's speech to the House of Commons, it was mentioned yesterday that he did say that we can now help families with permanent tax cuts, and bringing down borrowing to begin reducing debt. That was said last night.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we
So
saw.
surely expected to hear from UK's Chancellor Hunt. Remember, the live feed is on the Financial News feed for you to have a watch together.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Stocks bouncing back on the S&P 500, positive by 0.4%. On the NASDAQ 100, doing all right as well, up by 0.7. Just in terms of the losses yesterday, biggest one-day move lower since the middle of February on the S&P, end of Jan on the NASDAQ 100. Lisa laughs every time I say it, so I'll give you the why. S&P 500 not suffered a drop of 2% or more in one day since February 2023. Longest run without such a pullback in 6 years. Thank you, Allegra Catelli here at Bloomberg, for that stat. Bramo, we've been starved of big losses.
Which is the reason why I keep asking, what is a dip? It's viable, but what is a dip? Does this count at a time where everyone seems to be saying the equities are actually the new haven because bonds don't offer you the offset to potential growth and potential ongoing inflation?
Focus on some big losses yesterday for the likes of Tesla. That hit discretionary. The likes of Apple, that hit tech. But away from the equity market, the driver in the bond market was really some data we got at 10 a.m. Eastern time just yesterday. It was the services ISM, and the employment component of that contractionary going into payroll. So we've got a bid into the bond market, another one this morning, down a single basis point. Lisa, 454.74. Are we going to get a repeat of the jobs data of last month? Because certainly that data yesterday did not confirm the boom to start 24.
The data's been really noisy. And this is what I felt yesterday, where you hear people basically saying, taking both sides and not really having a clear view. If you took a look just at the ISM services data, not only did you get employment that came in contractionary territory, but also prices paid came in below expectations, so less inflation. Other people are saying, well, there's a seasonality behind January, and February is going to be just as big of a boom. We just heard that from Cara Cadana. Put those two things together, soup, you hear voice. I mean, really, it's very difficult.
Can you explain this? Gold, 6-day winning streak on gold, all-time high. Yesterday, again this morning. Gold right now, Lisa, 21.33. What is behind this move?
I am not going to explain that to you. I will just say that some people will speculate that it has to do with Fed policy and the potential to allow the economy to run hot, inflation. Gold has not moved in a predictable manner. Sometimes when people are worried about inflation, we saw this back last year, gold didn't get a bid. Now people are talking about a store of value again at a time where inflation's coming in, and you potentially have Fed cutting rates. Big questions here about whether this can continue.
It's getting a bid now, that's for sure. 6-day winning streak for gold this morning. Longest daily winning streak going back to October 2022. That's the price action. Under surveillance this morning, our top stories, day one of Chair Powell on Capitol Hill, about 2.5 hours away. Powell expected to reiterate a lack of urgency for the Fed to cut rates amid growing concerns about upside risk to inflation. Andrew Honhorst and the team over at Citi expecting a neutral tone, with the Fed chair likely to highlight the need for more data and the importance of not overstating one data point. In the
Hunt begins his budget speech to Parliament.
CPI print together with that blowout payrolls report. So we end up on payrolls Friday all over again. These comments are going to come before that data drops on Friday. Will Friday's data confirm that 350, whatever it was, 353 for the month of January?
And some people are saying it probably will, that there was actually quite a bit of strength under the hood. We heard that again from Carl and from a host of other people who've come out and said that. What I think is going to be fascinating is that we're all looking at Friday's data. Are we seeing a Fed that is seriously de-emphasized at a time where the data is noisy and people are looking to other inputs to continue this risk rally? Not necessarily Fed policy in the way that people were last year and the year before.
Because certainly stocks have done okay in the face of repricing rates a whole lot higher than we thought they would be through most of this year. Just getting this report from Torsten Slock over at Apollo. Torsten, thank you as always. Reasons for a strong February employment report. He offers 4, Bramo. Financial conditions have eased dramatically. Jobless claims remain very low. The fiscal deficit is running high. There you go on that deficit point again. And the employment to population ratio is almost a full percentage point lower than pre-COVID.
And this speaks to his point that the Fed may not cut rates at all, or probably won't cut rates at all this year, but equities could keep rallying because you've got those tailwinds of the fiscal support. You have the idea of a low unemployment, and you have a really strong labor market.
And that's the economy. Let's turn to the politics just briefly. Donald Trump, Joe Biden, heading for a November rematch after securing sweeping victories in Super Tuesday primaries. And Nikki Haley, Trump's last rival for the GOP nomination, is ending her campaign. She's expected to speak in her home state of South Carolina at 10 a.m. Eastern Time. Trump and Biden winning almost every Super Tuesday contest, demonstrating their hold over their parties. And it's their hold over those parties that is going to get interesting in the next couple of days.
Hunt says interest rates remain high as US tackles, the UK tackles inflation. So Hunt saying interest rates remain high as the UK tackles inflation.
So within his own party, we saw again overnight in Minnesota uncommitted votes about 20%, which is not anything.
Hunt says that we can now
just
help families
shrug
with
off if
permanent
you're
tax
sitting in this
cuts. So
campaign.
repeat what he said
Pockets within his own party
last night.
to speak to, and then the broader electorate. What Greg Vallier was talking about, with polls continue to show, majority of Americans just think he is too old. So again, for me, it's not so much what Biden says, it's how he says it. How does he come out
Hunt
and
says lower
communicate
taxes
this
means
in a robust
high growth.
manner that people feel like, okay, we are giving him another 4 years, and we feel confident about those 4 years.
People look at those uncommitted votes, and I think they point to the Middle East. I do wonder if it's more than just one single issue driving those uncommitted votes.
Well, when it came to Michigan, you saw a huge rally amongst Arab Americans, Muslim Americans, progressive Gen Z, who are saying that it was about a protest vote over what's happening in Gaza. It could be about other issues, frankly. It could be about, when you look at Gen Z, they feel like he hasn't done enough on student loans. You look at other individuals, say inflation is still too high. Prices have not come to where I remember they were under the former president, but these are at the moment just protest votes, but he does have a lot of work to do.
Let's turn to the Mag 7 and talk about some of the movers we've got on the screen at the moment. Tesla, over the last few days, has really struggled, continuing to fall away from the Mag 7, now facing issues in Germany, where a factory has yet to reopen after a nearby electricity tower was set on fire. An organisation called Volcano Group
Hunt says that growth cannot come from unlimited migration.
Tesla. Ben Callow of Baird saying investors should lower expectations.
Hunt says we need to boost GDP per capita, not just GDP.
This has been a really tough start to the year for this company. Bloomberg's Craig Trudell joins us now for more. Craig, I want to understand from your perspective, first of all, what on earth is going on with production at that factory, and then you can tell me whether this is actually probably not so much of a bad time to lose production, given what's happening with demand worldwide.
Hunt says policies mean more investment,
I
jobs,
think,
and lower
if
taxes.
If you're just following Elon Musk's posts on X, you think, wait a minute, some lefties in Germany have lost the plot and decided to disrupt an electric car factory. What are you thinking? In reality, on the ground, there's real local opposition to this company expanding in what is, a forested area. They cleared a ton of trees to make room for this plant. That was unpopular. It's an area that doesn't have a ton of water, that has a sort of troubling long-term trend for the water supply. Tesla has not, taxed the water supply to the extent that was feared in the early goings, in part because it has decided not to go forward with making batteries on site. But that's a threat down the line. So, there is real
Context changes everything.
I think I was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and any given day it would be the head of a studio, and just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising